Good morning. Audible?
Yes, sir.
Yes, sir.
Where are others? Today only five.
Good morning, sir.
Good morning. Good morning.
Good morning, sir.
Yes. Shamia madam, good morning. The one is there here. Any doubts here till now? Any doubts? No, okay. Shall we start or let's wait for 5 minutes further? What should we do? Okay, today 6 are there. Let's wait for further 5 minutes and then we will start. Let me share the Excel sheet. Is the Excel sheet visible?
Yes, sir. Yes, sir.
Yes. So now we had, so before that, before starting the class, a gentle reminder that we had started with the syllabus of the part 1. In part 1 we have completed IFRS 18 and we have done the conceptual framework. Today we will complete IFRS 13 and we will be starting with IAS 16. Now I need a suggestion from everyone. Saturday and Sunday you will be having 2 hour session. Here you have 4 hour session. Every day you have 4 hour session. So I'm planning Saturday, Sunday 2 hour session. We will be doing the standards which are not much important, but we'll be covering that in more detail there. So IS 20 and IS 23 I'm planning this week. This Saturday, Sunday 2 hours. Saturday IS 20 and Sunday IS 23. The same coming for the next week also, IS 2 and IS 41. Is this okay with you, everyone? So that I'll get a good time to do in detail. Yes. So I'm also yes. As I mentioned that I'm going very slow based on your pace only. Because conceptual framework I have taken 4 hours. No one will do that. 2 hours done. Fair value 2 hours. But we have spent a whole class on fair value, more than 4 hours, and doing a lot of questions. Is this okay with everyone? So that the aim is, what is the aim? No, the aim is to complete this by these two by your this month end, so that we'll have a good time for part 3, part 4, and your part 5. In July we can complete this all. In July also we will do the same thing. Saturday, Sunday, if we have time, no, we will do this IES 24, IFRS 1 small topics for 2 hours. For everyone it is okay?
Yes, sir.
Yes. Okay then. See, the agenda will be there as we do the standards. As yesterday I have done IFRS 13. Along with that, I'll be giving the homework question, and the homework questions will be what? The homework question itself will be the questions from the previous year papers or the exam kit, etc. So try to complete the question once as you do the standard, and once again in August you can do the whole exam kit 2 times. See, the key to pass professional paper is that do the exam kit 2 to 3 times, for sure you'll pass the exam. It's the key to pass. If anyone says that do the exam kit for once, I say no. Do the exam kit more than 2 times, for sure you'll pass the exam. It's not that you should type all the answer. Now, as you do the standard, type out the answer. When you come near the exam, just read the question, read the answer. You'll get more understanding about the concept and you'll learn how to frame your answer. Is this clear to everyone? If you were late, the agenda is that on Saturday and Sunday you will be having 2 hour session, so that we can cover small standards which are not so important in SBR, rarely tested. Like in the first part, IAS 2023, part 2, IAS 2 and IAS 41. In part 3, you have IFRS 1 and IFRS 8. In part 4, you have IAS 24. Is this clear? That is the reason I've divided the portion in such a way that part 1, part 2 covers your SBR part of your college also and the basic of FR also.
Yes, sir.
Yes?
Yes, sir.
Okay then. Chalo. Is the recording on?
Yes, sir.
Yes, sir.
No. I hope the screen is visible regarding fair value. We had started with the concept known as fair value. We discussed that this standard is very important as the term fair value is used in each and every standard. In each and every standard, the guidance regarding the fair value calculation is not given. A separate standard has been developed so that there will be no confusion and it will be easy also. So we discuss what is important here. I mentioned that IFRS 13 will not apply to inventory, lease, and share based payment. Then we had started with the definition. What is fair value? Fair value is the price that would be received to sell an asset or pay to transfer a liability in an orderly transaction between market participants at measurement date. I mentioned what does price means? Exit price. It's not entry price. And I mentioned that this price we will be learning today. What is the input you have to take to calculate the output, that is your price. And I mentioned that orderly transaction means what? It should not be a forced transaction. The person or selling should not be under any shortage of cash. Market participant means, what did I mention? They should have knowledge. They should be willing to sell the asset, willing to enter into the contract. Then what is the other one we had discussed? Knowledge, willing, independent, and what is the other one? If you
Ability to fulfill the contract.
ability. Is this clear? At measurement date, this measurement date will be decided, will be given by each respective standard. Then I mentioned that whenever we calculate IFRS 13, what should we take into consideration? We will always focus on the market condition. We will ignore the entity specific restriction. And I mentioned that even though the entity will say that, let's take an example, the entity say that we have an asset. Okay, we will decide not to use this asset. But when coming to the market users or the market participants will say that if we use this asset, it will provide more benefit to us. So on that basis, we have to calculate the fair value, assuming the market participants, not the single entity or the entity's restriction. We discussed that there are three approaches. Market approach means what? What is the recent sale price? So can I say fair value measurement is based on market approach? Cost approach means what? Replacement cost. If you want to replace the asset today, what will be the value? Income approach, like your present value, future cash flow, etc., xyz. So we had discussed that transaction cost must be ignored and transportation cost should be taken into consideration, because transportation cost is market specific when coming to transaction cost is entity specific. Then we had a discussion regarding market. Two types of market you have: principal market and most advantageous market. You want to calculate the price means the market price, quoted price. Where will you go? To the principal market. Principal market means a market where the volume for the level of activities is very high in case of assets and liabilities, or where the frequency of the transaction is very high for the assets and liability. So how we will calculate? Fair value is equal to market price minus transportation cost. In case of most advantageous market is the market where it maximizes your net benefit which you get from the asset, or it minimizes the amount which you pay for the liability. So here you have two steps. First, you have to identify what? Most advantageous market. How will you identify? Market price less transportation less transaction, you will get the net amount. You will get two or three markets, you have to decide which is giving the most benefit. If this is giving the most benefit, then what will you do? Then you will calculate the fair value. How will you calculate fair value? Market price minus transportation cost, not transaction cost. And I mentioned it's transaction cost will include what and exclude what. Do remember, transaction cost will exclude income tax and finance cost. It will include brokerage, commission, auction fees, any amount you pay to legal authorities, etc., and tax and duties. Then we had the discussion regarding non-financial asset. In case of non-financial asset, IFRS 13 has mentioned that the example of non-financial assets are what? PP, intangible assets, biological assets, etc. IFRS 13 has mentioned that you should calculate the fair value based on highest and best use, even though the company is not using that asset in that way. Like if I have a land, I am planning to use it for my factory. I'm not using this as a commercial property, residential property, or for my agriculture purpose. But when I calculate the fair value of my factory, I have to consider all the options. And when will you say that all the options should be considered? When it is physically possible, legally permissible, and financially feasible. Legally permissible means it's not legally prohibited. Then, starting with the today's session now. Is there any doubt till here?
No, sir.
No? Okay. So now, starting with the next topic known as the determination of price of assets and liabilities. Now, I mentioned that we have to look to the price. Now, when you look to the price, if I say you want to calculate the fair value of Reliance share price, so what will you do? As we have discussed this, that sir, we will go to the stock market, NSE or BSE, we will get the price. Now, when you go to NSE and BSE, can I say it is already listed, that it is already quoted? Yes or no?
Yes, sir.
It is already quoted. Now, when coming to this topic, you have to understand two important terms. The first one is that what does the term identical means and what does similar means? Identical or similar, what does this means? Then you have to understand observable inputs and unobservable inputs. Now, can anyone say me what does identical means and what does similar means?
Identical means exactly the same, but similar means somewhat same. It's not exactly same, but it's somewhat same.
Okay. So I hope this is clear. Identical means copy paste, same 100%. But when coming to similar, it will not be same. Some changes will be there. Now coming to observable and unobservable means what? Can anyone say me what does observable means?
We can easily identify it or find the value somewhere.
Okay, what about unobservable?
It would be little difficult to actually find the value. It is not easily, like, not eye-catchy or something like that.
Okay, now let me take an example. The recordings which we have done for the previous last three classes are uploaded on YouTube. Yes or no? So can I say everyone has the access to that? Everyone can use it. Everyone knows it. But when coming to the remaining classes from today, will it be uploaded? No, you only will be getting the recording. So can I say the first three classes which is uploaded on YouTube is what? Observable. It has, everyone has the access. It is known to everyone. But when coming to unobservable, can I say everyone do not know? Only you, the students who have registered, they know where the recordings will be available, etc. XYZ. So basic understanding, this is clear. You will be able to identify. Same way when coming to the prices also, when you have to calculate the fair value, if the price of the same asset or liability is available and it is known to the general public and it is known to everyone, then you will say it is observable inputs. And if it is not known or it is known to a specific group of persons, it is known as unobservable inputs. Now you only say me, when you want to calculate the fair value, should you use the observable inputs or should you use the unobservable inputs?
Sir, observable inputs are usually preferred, but unobservable is when observable is not available. That's when you look internally in the entity and then find out.
Okay, I got to know. So that means, can I say when I want to calculate my fair value or when I want to decide the price, can I say I should give the priority to the observable inputs? That means the market conditions. What is the market thinking? Rather
Yes.
than
Yes.
unobservable. So now when you want to calculate the price, so there are three levels which is determined by IFRS 13. So first one is what? Level 1. Inputs are quoted price for identical asset in an active market. Inputs are quoted price. Quoted price means was listed somewhere. For identical asset means copy paste in active market. Active market means where the transactions are moved. So these inputs provide the most reliable evidence of fair value. They must be used without adjustment whenever available. For example, quoted price on a stock market or a quoted price of government bond which is traded in the securities market. Either it could be in primary market, either it could be in secondary market. So whenever you want to determine the price, IFRS 13 says your aim should be what? To maximize the observable inputs, to use the data which is available to the general public rather than making your own estimate, making your own judgments, etc. So when coming to level 1, will there be any adjustment? Will you use the calculator? No adjustment will be there. So this will best suit for what? Examples for like share price, then government's bond, etc. So now if I say Reliance company is there, we have done this. Now let me take another example. Zomato is listed.
Yes, sir.
Swiggy is also listed.
Yes, sir.
So we can't compare this. Any other example? The companies which one is not listed and one is listed in the same sector. Let's see anyone. Anyone with an example?
Sir, Ola is listed and Uber isn't.
Uber. Uber is not listed in India, but it is listed. It's listed, no?
Sir, Amazon and Flipkart.
Flipkart and
Amazon.
Amazon. Flipkart is not listed.
No, sir.
Pakka?
Yeah, sir.
Yes. So now let me take an example of Amazon you mentioned. So can I say if you want to calculate the fair value of Amazon share price, you will go to the market, you will get it. But when coming to Flipkart, will you get it?
No, sir.
So then if you have the shares of Flipkart, how will you calculate the value? Can I say you will see similar items? Can I say these both are similar companies?
Yes, sir.
E-commerce. So can I do one thing? Can I say instead of using Flipkart's judgment what will be the value or etc, or deciding by myself what could be the value on my own judgment, it would be better that I would take the Amazon share price and adjust it so that I get some accurate value or approx value. Rather than doing my own judgment, I will take the Amazon value, I will see what is the valuation of Flipkart. On that basis, can I decide the share price or not? I can see what is the market cap for $1 of earning, how much the shareholders are willing to pay, etc. With this, can I decide the Flipkart share price? Yes, for sure. So can I say in this case, what we have done? Can I say in this case, we are using the observable imports of similar items and adjusting it to get the value. So when coming to the level 2, if level 1 is not available, the direct observable input is not available of the identical asset or identical item, what will you do? You will take the value of the similar item and adjust as per it. So level 2 inputs are observable price that are not level 1 inputs. Level 2 inputs may include. So here they are saying that what level 2 inputs are observable price, but these observable price are also adjusted. Or the other example also we can take. Let's take the other example. This is an area. Here plot 1 is there, plot 2 is there, plot 1, plot 2 and plot 3. Now here also a building is there. Now this is a road, this side is also road. Now I say this plot belongs to Soham. Now Soham is recording this as IS 40 investment property and Soham needs the fair value of this. Now, in the recent time, the price of the plot 2 was determined. How it was determined? Within 3 months or 2 months, the plot 2 was sold. Let's take the plot 2 was sold for 10 lakh rupees. Now this plot 2 was sold for 10 lakh rupees and I need the value, or Soham need the value for plot 3. Now you only say me, how will Soham calculate the fair value of this plot?
Is it that he will use the value of plot 2 because it is like a similar thing and then do some adjustments?
Yes. Now, can I say that level 1 means what? Identical. Is there any same plot? Yeah, plot is the plot 1, plot 2, plot 3. But can I say this plot 3 is in corner and has two side roads or three side? If back side is also road, it has three side roads. Can I say this will be benefit or not to Soham?
Yes, sir.
Yes or no? Or can I say the price will be more when compared to the plot 2? So it is not an identical. Can I say similar and you have to adjust? Can I say what will be the adjustment? Can I say for plot 3, the fair value will be more when compared to plot 2? So adjustment. So will say that, okay, as it is a corner side, I will get 2 lakh rupees extra. This is the way the level 2 will work. Any doubts on this? You're using the observable inputs only, but these observable inputs are adjusted again. Do understand that. So level 1 and level 2 will use what? Observable inputs. And in level 2, calculation will be there. Adjustments will
The adjustments are done by the entity only.
Yeah.
Okay.
It's not by the entity, a valuer will be there, etc. XYZ. We are learning accounting. Simple. As an accountant, will you go and find out the fair value? What is the price of that plot, etc.?
No, sir.
Oh, no. You will only say that I need the fair value of this. Mostly when coming to the fair value concept, oh, in practical world, this standard is very this one. It's that based on judgments only, full. But in the judgment also, you as an accountant, you should be fair. This much only, nothing much. If you are an accountant, you record the value of the asset as 2 crores, the shareholder will believe that okay, yeah, it has been recorded correct only. Okay. Can anyone read this? The level 2 for me? Three things. Let's pick someone. Yes, Samya. Read ma.
A. Quoted prices for similar assets in active markets. B. Quoted price for identical assets in less active markets. C. Observable inputs that are not prices, such as interest rates.
Next.
These would include prices for similar but not identical assets or liabilities, which were then adjusted to reflect the factors specific to the measured asset or liability. For example, A. The fair value of fixed income securities without active markets may use benchmark yields for similar securities with observable prices. B. Fair value of, of a security that is not actively traded may be a broker's quote based on observable market data for similar instruments. C. The fair value of building in use may be based on price per square meter for comparable buildings in similar locations.
Okay, okay. So I hope the first point is clear. Quoted price for similar asset in an active market. You will take this example of Flipkart, you will take the share price and you will adjust it. Similar asset was what? Amazon share price, you will adjust. The second one, quoted price for identical asset in a less active market. Now, if you have a basic knowledge, sometimes you would have seen in stock market what will happen that today a share is listed and its price is $10. For the past 2 months, there has been no trading. No one is buying or purchasing this. Can I say, if you see after 2 months, the price in the stock market, if no one is buying or selling, can I say still the price will be $10 only? Is this the correct value? No. Even though the share is listed in the active market, but the frequency is very low. So, what will the person, or when you want to calculate the fair value, what will you do? This $10, you will do the adjustment considering the 2 months factors. What were the 2 months factors? What are the profit? Was there any loss, etc.? You will do the adjustment. Any doubts on this? Quoted price for identical assets in a less active market.
No, sir.
Yes. Observable inputs that are not priced. Sometimes there could be some inputs which are not priced. Then what you can do? You can take the interest rates of some other and discount and calculate the value also. Level 1, level 2 is clear. Now coming to level 3. If I say, coming to level 3, if I say there is no quoted price, there is no similar asset, etc., it's a unique asset, then what will the company do? If it's an unique asset, level 3 should be followed, because level 1 is not applicable, level 2 is also not applicable, then level 3 comes into picture. In this case, level 3 inputs are unobservable. Unobservable inputs could include cash or profit forecast using an entity's own data. A significant adjustment to level 2 inputs would lead to it being categorized as a level 3 input. Now, can I say level 3 input means what? If I have a unique asset, I do not know what is the fair value of this. Can I say in future how much this asset will give me profits? On that basis, or the cash flow which I'll be getting, I will discount and calculate the value like your present value of future cash flow. And if there is significant adjustment in level 2, then that significant adjustment, then the price will be based on what? Level 3 input, not level 2. If I've calculated any price taking a similar asset and I've done a lot of adjustments, a significant adjustment, then it will come under what? It will be level 3, it will not be level 2. So now, can I say level 3 is based on what? The data which is given by the entity. Can I say there could be manipulation in level 3? Can I say this all is what? Management guess? Management guess. And can I say why level 3 is given the least priority? Can I say the level 3 is given least priority because it is the estimate of the management and it is based on the future cash flow?
Yes, sir.
Yes. So priority is given to level 1 inputs. The lowest priority is given to level 3. Any doubts on this? Anyone?
No, sir.
No? Okay then.
No, sir.
So now coming to this one. Question now. Let's solve a question. So I mentioned what are the type of question. Type 1 question could be principal or most advantageous market. The type 2 question could be what? Non-financial asset. What could be the type 3 question, beta?
Levels of input.
Determination of price, that is, and 3. Is this clear? Now chalo, let's solve a question. Sahana, read the question, beta.
Raju has an investment property that is measured at fair value. This property is rented out on short term leases. The directors wish to fair value the property by estimating the present value of the net cash flows that the property will generate for Raju. The directors argue that this best reflects the way in which the building will generate economic benefits for Raju. The building is unique, although there have been many sales of similar buildings in the local area. Required, discuss whether the valuation technique suggested by the directors complies with international financial reporting standards.
Okay, okay. The question is regarding which IS or IFRS? First thing, that one.
IFRS 13.
IFRS 13.
13, under IFRS 13, which concept? Principal market, most advantageous market, then type 2 question which we have discussed, or type 3 question now?
Determination.
Determination. Now, by reading the question, what do you understand here?
Sir, we understand that the directors are coming in with the level 3 input calculation method. They're planning to do that, but in actuality, there are similar buildings in local area.
Hmm.
So it can be level 2.
So, can I say here level 2 should be used rather than level 3? But
Yes.
the
Yes,
directors
sir.
are saying what that? The director are saying that we will be using what?
Level 3.
So can I say as per IFRS 13, this is wrong? The adjustment or the directors have mentioned that they should use the level, the fair value of the property should be based on the future cash flows. This is wrong because there are similar items or similar buildings in the market which have been sold. We will take the value of the similar buildings and adjust based on the investment property which we have.
Yes, sir.
Yes. Now, can you type the answer and send me? You have 10 minutes. You have 10 minutes. Do type the answer and paste in the chat box. Today, everyone are there, no? Strength is full today.
Yes, sir.
So, what is the first line you'll write down? What is the first point you'll write down?
Definition of fair value.
Yeah, if you'll write down also, you'll get marks. If you okay, so write down the basic. What is fair value? Write down, do that. Then, can I say what is the first point you will write down whenever you get the question regarding this?
About the hierarchy and the level.
Directly, yeah, directly will you start with the hierarchy, or can I say we can
Fair
write an
value
important
is,
sentence? Can I
fair
say,
value is market specific and not entity specific.
then leave that. Then chalo. Then what is the other?
So connect to the case.
Connect to the case. How can you connect to the case? Can I say before that we have to write a simple important sentence? What is that? Can I say as per IFRS 13, when we want to determine the price, the priority should be given, or the observable input should be maximized, the usage of observable input should be maximized, and the usage of unobservable input should be minimized? A basic sentence, this carries one important mark. When
Yeah.
coming to determination of price, this carries one marks. In your own words, you can write down when we want to calculate the fair value and or we want to determine the price, we should use observable inputs rather than unobservable inputs. Unobservable input should be given the least priority. Even though if you do not mention level 1, level 2, level 3, no issues. Mention this observable inputs and unobservable inputs. So write down, please write down and copy and paste your answer. Done. Who's this? Who has written this? Sahana. Sahana, you have written better, correct? But can I say you can write down further saying that the fair value of the building should be taken of the similar building and should be adjusted based on the location and condition of the building so that we get the fair value. Include this one line also so that your answer becomes perfect.
Okay, sir. I'll include.
Yes, you have drafted properly, bete. Hence, you have advised, it is advised to follow level 2 input for determination. Yes, correct. Now, little bit linked to the case. You have written everything proper. So, here, where is the question? Chalo. See here now. Can I say it is it is mentioned that the value of the similar building is available so that we will take the value of the building and adjust based on the location and condition of the property.
Yes, sir. I'll include that.
Okay. I have yes.
So should we define level 1, 2,
No,
3?
bete, no, nahi chahiye. You do not have so much time in the exam. That is the reason what did I mention? Observable input should be maximum error. You have to see the question, the marks. If this
Yes.
is for 4 marks or 3 marks, then don't waste your time. Simple 3-point move. If the question is regarding 10 marks, no, then can I say if this question comes for 10 marks, will you get marks by writing 3 sentences? No, then determine what is level 1, level 2, and level 3. You will get the marks.
Yes, sir.
ये किसका आंसर है? Vivan. Okay. Vivan, you mentioned that forecasting would be inaccurate. Okay, good. You can also add that forecasting would be inaccurate because it is based on the management judgment and manipulation could be there. So to give a fair or faithful representation, we should use the observable market input of similar asset and adjust it. Okay, you have written. Your answer is perfect, beta. In the given time you have written, it's perfect. If it is for 3 to 4 marks, you'll get marks. Sometimes if the question is for 6 marks and 7 marks, you could add that also the directors are using this to manipulate, etc. XYZ. As I mentioned, this is only for 3 or 4 marks. So the answer which you have written is correct. Vivan has given the answer.
Marks for that.
Yes.
Will they give more marks for the points you said to have?
See, one thing do understand. This is the new thing I'm saying you today. One important thing. If a question comes for 6 marks, what should be your aim if you have good time to write down 6 plus 2 sentences? That is 8. In this case, what you can do, if you had time, you would have included what is level 1, level 2, level 3 means in a basic simple line. But you did not have time, so no issue. Now do understand that in exam, if a question comes for 6 marks, the examiner or the person evaluating your paper will start marking the question considering that this question is for 8 or 9 mark question. This is mentioned by the examiner. They say that if the question is for 10 marks, the examiner will mark the question or mark the answer script assuming that this question is for 14 marks. Is this one point clear to you?
Yes,
So
sir.
could you please repeat?
See now, if a question comes for 10 marks, bete, what you will do? You will write down 10 simple sentences or 8 simple sentences. But when the examiner evaluates your answer, no, they will assume this question to be of 14 marks or 12 marks. They will provide some lenience during the correction. Do understand that, because it is a full application based question. So that is the reason I say a format is that do follow that format, because it's not everyone will not write down the perfect answer, yes or no. It will not, everyone's answer will be different. So that is the reason in professional papers you have this one advantage. When you see the exam kit answer, can I say they are very too long and too detailed?
Yes, sir.
Same way, when the examiner is evaluating a script, the examiner also will be getting the same two big question, two big answer. In that, some specific points will be written. Like if I say these were the 4 sentences that student has to write compulsory, and they will write down, okay, if these two further sentences are written, marks could be given. A question is for 4 marks, and the answer, the marking scheme which is provided by ACCA says that these 6 sentences should be written, and this 6 sentences carry 6 marks. So the examiner will see, okay, have you written the 4 important sentences or not, and plus 2. So the marking scheme, if the question is for 10 marks, the examiner will start evaluating the question assuming that it is for 14 marks or 12 marks, and you'll be getting extra marks.
So, sir, if it's a 4 mark question and if we write for like 6 marks, can we get 6 marks?
No, nahi baba re. What did I mention? When the examiner is evaluating, no, that time they will consider this point.
Yes, sir.
Yes?
Yes, sir.
Because a question is that, see, when coming to this IS and IFRS, you will be writing in a format the answer. But when coming to the answer key which is provided by ACCA will be 2 point and will be too detailed. The examiner will, the answers key will also mention that if this point, the basic standard or the IFRS is also written, or something else which is logic to this question is written, the examiner can still give marks. So a lenience is there when they correct the paper. Do understand that.
Yes, sir.
I'm so sorry to interrupt, but can you please check my answer?
Yes. So yes, value, yes, okay. Sayyed, you have written the answer, bete. It's correct. As I mentioned, do try to link to the scenario that the fair value of the property can be calculated using the price of the building and adjusted based on the location and condition of the property for which we are calculating the building, or the property which belongs to Raju. Add this one sentence. This means you're linking to the scenario. Okay. Sinchana, your answer is correct, bete. You have mentioned that. I needed that only. Who's this who have mentioned the conclusion also? Dhruv, good Dhruv. You have mentioned the conclusion also. Yes, you have mentioned the good. Pranati, okay, I for 13 years. Yes. Pranati, beta, you have written the level 2 full explanation. Yes or no?
Yes, sir.
Yes. If in exam you do not have time, do not, if time is very less, don't waste your time writing that. Instead, focus on linking to the case a lot. See, here you have written everything is correct, but can I say the when coming to the case, you have written very less, you have written less.
Yes, yes.
Try
Yes,
to
sir.
improve that. Try to improve that better.
Okay, sir.
That means you can write down that to calculate the fair value, the person that Raju should use the price of the similar property and adjust based on its location and condition. Simple. Then who's one? Yeah, okay. I've seen the answers of everyone. Now anyone has shared Sayyid then? Okay. Yeah, just have shared. Okay. Level 2. Yes, your answers are bang on right, but try to link to the case. It will come over time. It's not that you'll be perfect on the first day. So try to link with the scenario a lot. Yeah, just you could also include the sentence which I've already mentioned to everyone better. Soham, you also written try to spend less time on writing about the standard. That is the reason I've written very less. What does principal market mean? Most of it simple, right? Then try to link a lot with the case. You can't write the perfect answer on the first day. Over the time, you will develop this. So next time when you write down the answers, do keep in mind. Shantari, same way. This applies to everyone. Shamya has also shared the answer. Let's see. Based on the location. Yes, Samya, your answer is correct, but you have included the director's argument, etc. X, Y, Z. Okay. So try to little bit. Your answers are correct. If this question for 4 marks, you will get 3 marks for sure out of 1 marks is what the examiner will think that you have written very good answer from the starting. Try to link little bit more to the case so that you can get out of out. Is this clear to everyone?
Yes,
Yes.
sir.
Yes. Okay. Chalo then. So with this, we have completed the concept for what? With this, we have completed the IFRS 13 main points. Now, let me give you further questions. Is the question visible?
Yes, sir.
Can anyone read the question for me? Let's this time. Anyone?
So,
Yes. Yes, read better. Any doubts or will you read the question?
no, sir, I will read.
Yeah.
Sutherland holds the following assets measured at fair value.
Yeah.
That equity shares measured at quoted price. Land held for sale, which is measured at fair value by reference to sale prices of comparable land in a similar location, adjusted for key attributes such as land size, price per square meter. Investment properties whose fair value is measured using an income approach based on discounted estimate rental income to reflect current market rates per square meter. Identify the input used in each fair value measurement and explain how the valuation corresponds to the fair value hierarchy of IFRS 13 fair value measurement.
So this question type 1, type 2, type 3. Which question better? Type 3 question. That is based on the hierarchy. Now, in the first one, which input will you use? Which level you will use?
Level 1.
One.
Level 1.
One.
Second one.
Level 2.
Level 2.
Level 2.
Then third one.
Level 3.
Level 3.
Straightforward. Duh. Okay then. Now coming to the next one. Chalo. This one which I've included, it's not there in your book, etc. You will not find anywhere. But I've included because it has been tested in one of the papers when this IFRS 13 was introduced. No, in 2014 or 13, that time this IFRS 13 came for 25 marks in your SBR exam. That time it was known as P2 paper. That time, a question of 25 marks came full of fair value concept. That time, this question only helped many of the students to pass the exam. Now we will see that question also. Now, when coming to the fair value for liabilities, in case of fair value for liability, how will you calculate better?
Whichever is minimized.
Yeah, which one will minimize? But you have the basic understanding that when coming to the fair value of liability, which is low, you will consider that. Now, when how will you determine the price? Now, what is the first priority you will be giving in case of this one? If there is an active market of liability, then use the quoted price of that liability. Yes or no? If you have a liability and that liability is listed anywhere, then you can use that. Now, can you say, are there any liabilities that are listed, or is there any quoted price for any liabilities here? Or very rare, this situation is very rare.
Very rare.
Very rare, no? So if there is any liability and it is quoted in the market, use that. Very rare. Then second one, if your liability is an asset for someone, if your liability is an asset for someone and that asset has an active market, then use that asset price with some adjustment as the fair value for the liability. Can I say if it is a liability to me, it will be an asset for someone? If it
Yes,
is a
sir.
liability to me, it will be an asset for someone. In that case, what will I do? How will I calculate the fair value of my liability? The fair value of the asset I will take and I will adjust based on the liability factors. This is the second priority. If quoted price are not there, you will see what? A liability which is an asset for someone and that asset has an active market, you will adjust it. Then coming to the third priority. If there is no corresponding asset, then valuation technique is used. Then what is used? Valuation technique. So what are the different types of valuation techniques? That is present value of cash flows using two rates. The two rates are what? Current market interest rate plus entity's credit worthiness, that is own credit risk. Whenever there is, yeah, just are you facing any network issues? When coming to the valuation technique will include what? Present value of the future cash flow. Present value of the cash flow that you have to pay in future, you will discount it. How will you discount? By considering two rates. First one is the market interest rate and the second one is what? The company's credit risk, that is the company which owes the liability. If I say I have to pay a liability and that is it is not an asset, it is not quoted, then what will I do? If I have a liability, I have to pay someone in future. What are the cash flows I have to pay in future? Take that, discount it with which discount rate? Which discount rate? The discount rate should include what? Current market interest rate plus the credit risk, the risk of the company. This will be given in the question. Now let's see an example for this. Read the question. Everyone read the question and try to understand. Read it by yourself. This topic is very rarely tested. It was tested once, as I mentioned. Done reading? Yes or no in the chat box. Yes. Now you only say me that if I have today 1 lakh rupees of liability to be paid after 2 years, if that means what? If I want to transfer this liability, can I say I have to pay someone? Now, if I have to pay someone, can I say after 2 years the person has to pay 1 lakh rupees? Can I say today I will give him 90,000 only today? Yes or no? If I want to transfer a liability of 1 lakh rupees, I will pay a person 90,000 only. Why? Can I say the person is getting today 90,000 and he can invest this somewhere and get the money so that this will be equal to 1 lakh rupees in the future? That is the reason you will see that the person will pay low. If a liability is of 10 lakh rupees, they will pay low. Or they could pay more also. That depends on the risk of the company, but mostly they will pay low because today I am giving you the amount. Can I say for the further 2 years you will be having that amount? For the further 2 years you will be having that amount, you can use it. That is the reason we discount the value. Which value? You will discount this 1 lakh rupees and try to find out what is the value today of that 1 lakh rupees using a discount rate. That discount rate will include two important factors. The first one is what? Market interest rate plus credit risk of the company. Which company? The company who is transferring the liability. The company which is transferring the liability. Now, in this case, what is the amount they have to pay here now?
1 lakh in 2 years.
1 lakh in 2 years. Yes or no? So, what is the first point you'll write down here? What is the first point you will write down, beta, here?
Definition of fair value.
Yes, definition of fair value. How will you link this to liability?
It is a transfer of liability.
Yes, it is a transfer of liability. Yes or no? Then what will you include the next point? What is the next point you'll include?
Market specific and not entity specific.
Then after that,
Level 1 and level 3 being least used and level 1 being most used. Priorities, basically.
you can speak. Okay, then I need the main answer. Let's take the question is only of for 3 marks. Then you have to write down this in 5 minutes and move forward. Let's take you wasted your time reading the question for 2 minutes. Now you have 3 minutes. You should write 3 simple sentences. First one, you'll write liability. Yes or no? What is the fair value definition? And you'll write down it is to be transferred, etc. Then what will you write down? Can I say
that?
yes, yes?
Do we write if there is no corresponding asset, then the third point that is specified in liabilities?
Yes.
We should
Simply
use
write
a
down.
valuation technique to find out fair value. Valuation technique must include the market interest rate plus the credit worthiness, which is given in the question.
Yes. Write down the simple and discount the value. Move forward. Done with the answer. Is this clear now?
Yes, sir.
What about others?
Yes, sir.
Yes, sir.
So what is the valuation technique you are following? Can I say we are for the valuation technique which we are following is the income approach. Last one. First we had market approach. Market approach we are not following. Then we had cost approach. We are not following. Can I say then we are following the income approach? We are discounting the value and recording it. So can I say which rate you will use here now? 5 or 7? Discount rate, the interest rate will include what? Market interest rate plus the credit risk of the company. Now, say me for C company it is 5 and for F company it is 7. Which rate will you use? 5 or 7 percentage to discount?
Is it 5 because they are the one transferring the liability?
Yes, and can I say why the percentage is also less? Can I say they have an excellent credit rating? Yes or no? If a company has very excellent credit rating, can I say that means there is no issue or there is no credit risk regarding the payment? So that is the reason you will be using 5%. So how much is this now? Can I say 1 lakh divided by, do you know what is the formula for discount? 1 divided by 1 plus r to the power of n?
Yes, sir.
So
Yes,
how
sir.
much is this? Can I say 1 lakh divided by 1 plus 0.05 to the power of 2? How much is this? Can you calculate it?
Is it 90,702.9?
90,000.
702.9.
What about others? Are you getting the same answer? Chalo, chalo, fatafat, say me yes. Are you getting the same answer?
Yes, sir.
Yes. Okay, chalo. Is this clear?
Yes, sir.
Very rare of this question coming like in case of liability, but we have done what you will be doing. Now coming to the homework question. Now, is there any doubt in IFRS 13? We have done each and everything. Now coming to the homework question which I have given. Did anyone see these questions which I have given you?
Yes, sir.
Yes. So see, this was the question which I mentioned came when IFRS 13 was first time introduced. No, the question came for 7 plus 6 plus 10 marks. The second question is for 10 marks. The now in this question, see what are the question requirement? I will only discuss this. You have to type your answers and send me. Discuss the main principle of fair value measurement as set out in IFRS 13. So, what is the main principle? You will write down that. You will write down what is principal market, what is most advantageous market, etc. You will write down each and everything. What is fair value? It is entity specific, not market specific. Transaction price, transportation. What is principal, active, principal market, most advantageous market. 7 marks of that. Then discuss the three level of hierarchy of fair value. Is this easy or not? You should discuss this in detail. Can I say they have only mentioned describe the three level? So discuss in detail what is level 1, level 2 and level 3 and discuss what is the priority. Is this clear?
Yes, sir.
Then coming to the next question. Now here this question is for 10 marks beta. See here, discuss the relevant computation. Can I say you have to discuss as well as you have to do the computation here. So can I say here out of 10 marks, can I say 5 marks is for calculation and 5 marks is for theory?
Yes, sir.
Yes. So see this. Now this question, can I say in B part, there are further two requirements. This is the first part. This is the first part. And this is the second part here. This is the second part. This is the first part and this is the second part here. Now in this, can anyone say me this part here? Can you give the answer for this part? This question is regarding which one here now? Read the question and say me which topic.
Type
Type 2 question.
And yeah.
So will you be able to answer this or not easily?
Yes, sir.
Yes, sir.
Yes. So which one will be the principal market here, bete?
4 million Asian market.
But they're mentioning what J company currently only buys and sells the asset in Australian market. When you decide the fair value, will you only see the market where the company is selling or will you see from the market point of view?
Market point of view.
Yes. So can I say here which market is the principal? Asian market. So if it is the principal market, can anyone calculate the fair value for me? Fair value means what? Price minus transportation cost. Now say me what is the price and what is the transportation cost here?
17 fair value.
Fair value. That is 19 minus 2. The cost of entering the market is what here? To enter the market, you are incurring 2. To enter the market, you are incurring 2. And to enter the market of Australian market, you are incurring 3. So can I say this is based on the market? It's the cost of entering the market. It's like a transportation cost. So you'll reduce. Will you use the transaction cost? No, you have to ignore this. Now, if I say this question says that the principal market is not identified, assuming it is not, assuming that if the principal market is not identified, then what will you do? You'll do what? Which is the most advantageous market? Can anyone say me which is the most advantageous market here? It's an assumption. It's an assumption so that we have a revision again.
Sir, is it the Australian market?
So how much is 19 minus 17 and 16?
10,
This is how much? 12. This is minus 5,
17.
17. So which one is the most advantageous market?
Australian market.
Australian market. So what will be the fair value as per Australian market? 22
23, 19.
19. Yes or no? But will you use the most advantageous concept here? No. You will use the principal market and calculate it. Any doubts in this?
No, sir.
No?
No, sir.
Now coming to this one. I wanted to do this one only. Chalo now. See here now. Additionally, J had acquired an entity on 30th November 2012 and is required to fair value a decommissioning liability. Now, you know the basic that this standard is used in each and every standard. Can I say you have learned the basic concept of consolidation, that when you acquire any company, you acquire the company's assets and liability at fair value? Yes or no?
Yes, sir.
Yes, you have learned this basic, that if a company is that parent company acquires the subsidiary company, and whenever the parent company acquires the subsidiary company, it will acquire at the fair value of the assets and liability. So can I say J company has acquired another entity and they have a liability? Can I say that liability is what here? Decommissioning liability. What is this decommissioning liability? Can I say in IS 16 you have learned PP?
Yes, sir.
Decommissioning, the same liability. The entity has a decommissioning a mine at the end of its useful life. So at the end of the useful life of a mine, you have to decommissioning it. That means you have to restore it, which is in 3 years time. So they mentioned what from today date is what, 30th November. Now in the coming 3 years you have to restore it. Can I say in the coming 3 years, if you have to restore, you will record this, the subsidiary will record this value in its book or not? For sure they'll be recording as a provision. J has determined that it will use a valuation technique to measure the fair value of the liability. Yes or no? Have they given directly or not that they will use the valuation technique here? Why are we using the valuation technique? Can I say we are using the valuation technique because there is no active market? This is not an asset for someone, so that you can adjust and calculate. So can I say no corresponding asset, you will calculate the fair value. This had 2 marks. If you had written this, you would have got 2 marks in this question. And then the calculation had further 3 marks. Now you only say me, how will we do this? They have mentioned what is the input and they have mentioned the amount. They mention the labor and material cost, that is 2 million. They have mentioned that to decommission the mine, it will cost you 2 million. Okay, can I say this is an cash flow which will happen after 3 years? For sure, this will happen after 3 years. And can I say overheads, 30% of labor and material? Can I say 30% further? There will be, how much will be this? How much will this be?
600,000.
Is this clear? Can I say 2.6 million? What about others? I am saying, are you able to digest this or not? What is the expense in future?
Yes, sir.
Yes. Then can I say third party markup industry average? This means what? What does markup means? Markup and margin you have done. Yes or no?
One is upon the selling price and the other is upon the cost price.
Yes. So can I say this markup also should be included here now as a profit to the
Yes.
company? As a profit. Why? Because why? Because whenever you want to transfer your library, this is the decommissioning of a mine. Can I say the person whom you're transferring, he will charge what? He will charge the cash flow first, what he will incur in future. Can I say he will charge some profit? Yes or no? He will charge some profit or not? For sure. He's not taking your liability for free of cost. He also needs some money. He will charge that. After that, can I say he will also charge he will also charge something known as uncertainty regarding the cash flow? Yes or no? Uncertainty. It's not for sure that the cash flow which they have mentioned, that 2 million will be incurred after 2 years. It could be that more amount can also be incurred. So an uncertainty also will be included. Can I say these all things will be included? Can I say plus inflation also will be taken into impact here? Inflation also will be taken into impact. Can I say these all values you will consider and you will get some value? If I say it is 10 lakh rupees, this is the amount you will incur after 3 years. Can I say today you want the fair value of the liability? Can I say you will discount this 10 lakh rupees? You will discount this 10 lakh rupees. So what are we doing here? First we are calculating what is the value of the cash flow after 3 years, and then you will discount it. So that is the reason I've written here 2.6. Can I say a markup is made of 20 percentage? So how much this will be then? What is the profit figure here for the company? Can I say 20 percentage of this?
520,000.
2.6 into 20 percentage. So how much it is? 0.52. Then what they have given? Annual inflation rate of 5 percentage. What they mentioned? Annual inflation of 5 percentage. Can I say this annual inflation should also be applied? Inflation will be there every year. So if inflation is there, can I say the cost will increase or not?
Yes, sir.
Yes. So how much will be this year now? Inflation. This inflation will apply for how many years now?
3 years.
Years.
So can I say, yeah. So if I write in 1000, 2000, this is 600, then this is 520. So how much is this? 603120. Yes or no? Now can I say for this I have to apply inflation? After inflation, what will be the amount? Can I say every year 5% inflation? Can I say for 3 years there will be inflation? First year, second year, third year?
Oh, didn't you say it's on the cost inflation, but your profit is already added?
Yes, yes, beta.
So for calculating inflation, sir, shouldn't we take just the cost and not the profit?
Which one? Yeah, this 3120?
No, sir. Like you're calculating inflation on the total, right? After profit,
Ah,
you've added profit also, right?
ah.
We should only add cost, right? For
Yeah, yeah,
calculation.
yeah. But you only say over the time if the inflation is increasing, can I say the profit figures of the company will also increase? The company will increase their profit margin.
But that will be like assumption, right? Like
It is
we
an assumption. Now, if I say in exam you do not have time, will you? Whatever you can do, see the way you have mentioned, you can do the cost also. But I do not have much time in the exam. I will simply do all this. I will be keep on doing it, moving forward. I'll move forward. I'll not waste my time here. You
okay.
mentioned it correct that you can calculate on the cost, etc. XYZ. But I will directly calculate the figure. What did I mention now? That profit figure, everything is what here? Judgment only, no? Everything is based on judgment. If I am taking a liability of some person, what will I do? These all calculation, I also will prepare, no? If I am purchasing, I also will prepare. The person who is selling or transferring, he also will prepare. Then we'll have a negotiation, we'll close the deal. But when I do this, I will focus on this only. Now it is clear, better.
Okay, sir.
So if it is an inflation, so can I say inflation will be based on compound basis, compounding? So how will you do? Can I say 3120 into what? 1
1
point,
plus to the power.
simple 1 point. How much is this? Can you calculate this? What is the number? 3120.
So is it 3,611.7?
11. So I'll make 3612. And what is the difference here? 3120 minus 3612. It's 492.
490.
So my 492 is this part of the inflation. Yes or no? So then coming what is mentioned here, risk adjusted uncertainty relating to cash flow. So they have mentioned what here now? What they mentioned here, beta? A risk of uncertainty relating to the cash flow. So excuse me, what is the amount we have got? 3612 into 6 percentage. So my total uncertainty regarding cash flow is what?
216.70.
So I will add this. Then what will I do? 216. So this is the cash flow, 3828. Yes or no? See, this question which came no during that time. This is specifically mentioned in IFRS 13. It is already mentioned in IFRS 13 that in case of decommissioning liability, how should you calculate what? How should you calculate the value, present value, or the fair value of the liability? So this is the value. Now you will discount with what? You will discount with this rate. Risk-free rate of the government bond, that is 4% plus 2%. So what is the value? Can I say total? The 6% should be used for discounting. 3828 divided by 1 plus 0.006 to the power of 3. So if you do this, you will get the answer. Can anyone say what is the answer after discounting at 6%?
3214.063.
32 point.
063.
Okay. Everyone got the same answer?
Yes, sir.
So now, can I say what does the fair value include here now? Can I say, no, let me write down here on, let me write down, let me type out here so that you will have an understanding. See, this was only tested once. After that, it was not tested and it's not there in your syllabus also, but we have done. Can I say fair value of liability will include what all? Will include fair value of liability will reflect any compensation for the risk and profit margin then profit margin that is based on the market participants, not on the entity. And what is the other thing? Then can I say the market interest rate plus the credit risk of the company? No. Then risk of non-performance will be taken into consideration. Is this clear? Why I have done this? If you would have done this question, you would say, sir, we have a doubt, we are not able to understand. That is the reason I've taken here only this question.
Yes, sir.
Yes. What about others?
Yes, sir.
What about others other than Chinchana, Pranati? What I wanted here you to understand is that you will use what here? The interest rate, that is the current market interest rate plus the credit risk of the company you will take. Do understand this one. This can come in the exam. Others?
I have a doubt. Isn't interest rate already has the risk factor in it?
Which one, bete?
In this question only.
The risk factor is relating to what, bete? The risk factor is relating to what? There are two risk factors. The first risk factor is regarding the cash flow which you have predicted. And the second risk factor is regarding which one?
Government bonds.
No. Government bonds is what, bete here? Government bonds is what? 4%. That is means the risk-free rate. Risk-free rate means what? Minimum today, what is the interest I can get? Today, if I say, see, now you only take an example. If you invest in a fixed deposit, what is the interest you get? 8%.
Yes.
If I say if you invest in stock market, what is your expectation? That you get 15% return.
More
So
than
why
that.
are you charging the difference here? 8% you're getting in fixed deposit. If you go to share market, you are aiming to get 12% return. Can I say
Risk
what?
factor.
This whichever you're charging is the risk factor. You are charging additional percentage because of the risk which you have here.
Yes, sir.
Yes, or any doubts on this?
No.
So how do you know if it's a direct addition or a discounted calculation?
Which one? Which one, bete?
Like for annual inflation rate, you did
Ah,
that discounting and everything, and for risk adjustment, you just added 6% directly. So how?
6%. How bete? Here it is written. No. What did I mention here? When I mention in valuation technique, you use what? The discount rate. The discount rate should include what? Current market interest rate. This current market interest rate will be what? Risk free rate. Risk free rate plus entities credit worthiness or own credit risk. Now in the question they have mentioned what here? Risk free rate of government bonds. Can I say minimum? This is the requirement. This is the minimum interest you will be getting plus the risk, that is the 2% of non-performance risk. Don't
Yes,
go
sir.
in detail, Betel. Don't go in
And
detail. No need required to go in detail. Simple, follow this, get the marks.
so the risk adjustment part,
Ah,
uncertainty relating to cash flows.
this one,
Yes, sir.
this we have adjusted by considering the cash flow of Betel 216.
But like, why is it direct and not discounted?
No, no, this 6% means what? You mentioned that, sir, we think that this will be the cash flow in the future, 2 million, etc., XYZ. But there is a 6% certainty that more expense could be there. If more expense or more, see, now do understand once, there is a difference between cash flow and profit. Yes or no? Cash flow and profit. But
Yes,
can I
sir.
say if you know that for sure the amount of profit which you have made, you will receive full amount? Can I say that in future the ultimate profit will be equal to the cash flow? If there is no everyone will pay you, that means if everyone is paying you, can I say in future you will be getting the full amount?
Yes, sir.
Yes. So that is the reason there is an uncertainty regarding this 6% saying that the cash flow could increase. That is the reason we have taken cumulative together.
Yes, sir.
This is specified in the detail. A formula is also there, etc. XYZ.
Yes, sir.
Why I wanted to do this? Only it was tested for the first time once, not anyone else. But I hope this is clear. What are the interest rate you'll be taking? Risk-free rate plus entities non-performance risk.
Yes, sir.
Is this clear?
Yes, sir.
Yes, sir.
Let me do a work. Let me write down here the one which I mentioned here. Current market interest rate. That is risk-free rate. Risk-free rate plus entities credit worthiness. That is non-performance risk. Now it will be clear to you. So with this, we have completed. Oh, sorry. With this, we have completed the IFRS 13. Sayed, Yajash, any doubts? Two have left. Don't know. किसने? So, anyone? Any doubts?
No, sir.
फटाफट, be fast.
No, sir.
Doubts? Okay.
No, sir.
See, some concepts will be out of the box only. Still, you'll feel, sir, ये क्या है? Yes or no? What did I mention? Is this detail required here? The question which we have done now, is the detail required? No. No need. Only it was tested once, and that time the IFRS 13 was introduced new. And when any standard is introduced new, that is the reason they ask in full detail. That is the reason we have done IFRS 13 also full detail, including the theory part. No doubts. Okay.
Sir, so can we assume for the September attempt that whatever question is coming from the new standard, which is IFRS 18, it will be quite easy?
Yes, it'll, yeah, see, it'll not be, it'll be easy only, see, because only the format has changed. Everything is same. The other IS and IFRS, the concept is same. Only the way of presentation is different. Do understand that better.
Yes, sir.
There could be a question saying in your section B, question 4, compare IS 1 and IFRS this. It could be a theory question, you have to give your point.
Yes, sir.
Yes. So now this is the next question which you have to do. This first question is regarding highest and best use, and this one is also regarding highest and best use. Both the questions are regarding highest and best use. This is regarding a land, then this is regarding a brand value. Here, if it is used for agriculture purpose, it is 5 million plus 0.1. So this will be the fair value. And the other case, it is for residential property. The fair value is what? 7.4 million. And the cost, you have to reduce each and everything. The cost minus 2, minus 3, minus 1. And they mention a 20% discount. So overall, you will take 80% of the value here. Once you read the question, you will get to know. So do this question. It's easy only. Then this question is also there. You can do this is also regarding fair value. This is regarding the adjustment part. Adjustment. What are the adjustments you, the factors that you should consider? And this is the other question. This question also we have done. Yes or no? The same way, the example which I had given, that you will not consider the company selling. You will consider what? The market volume. You will not consider the volume of transaction based on the entity. You will consider based on the market.
Yes,
Any
sir.
doubts in IFRS 13? Still, I'm saying the questions which I've given today, you will see, sir, whatever we have learned, nothing used, sir. You will say me like that only. Once you start doing this question, you will find out 50% of the question easy and 50% of the question tough. It will be the same in the exam. So from the first day only, have the mindset that the paper will be in that way only. The questions you will see, no, this question, if you see, no, for the first time, you will not be able to understand what they are asking here. Here, let me give a basic example. They are saying that one person is there, one person is there. This person has a control over the entity. This person does not have a control over the entity. Now, can I say the person who has the control over the entity, and if he wants to calculate the fair value of the share price, can I say he will assume a premium here? He will assume a premium. But when compared to the person who does not have control, he will not assume the premium. A person who has a control and a person who has ordinary shares, can I say ordinary shares and preference shares, there is a difference? Can I say you have to do the adjustment for this also? Ordinary shareholders will not get the dividend each year, but when coming to preference shareholders, can I say they will be getting the dividend? Same case, when the company is liquidated into liquidation, can I say preference shareholders will get the first preference rather than equity shareholders? This all you have to write down here in this question, that the adjustment should be done. No calculation, only theory is that. So with
Yes.
this, I've discussed most of your IFRS 13 question in the class only, which are there previous year papers. Yes, anyone? Any doubt?
No, sir.
Okay. So with this, okay. Now, can we start with IS 16? Now, we will be starting with IS 16. Is my OneNote visible?
Not yet, sir. Yeah, now it is.
Okay, now most of the
Yes.
standards will be doing on OneNote only, the basic of your. Before that, what does IS 16 stand for? What does
Property, plant, and equipment.
property, plant, and equipment? Now, what did I mention? Whenever we start a new standard, we'll be learning 6 important points: definition, recognition, measurement, presentation, derecognition, and disclosure. Now, anyone, any idea what does PP means? Property, plant, and equipment means?
Non-current assets
Okay, then
that provide, it is above like 12 months.
it is about 12 months. Then,
Tangible assets held in a company
They
for
provide economic benefit.
yeah, one by one, one by one.
Its intended uses for production, administration, or to give out for rent.
To give out for rent. Okay, that means if I say my business is of manufacturing and I give a property on rent, will that property be considered as IS 16 here?
No, sir.
Why no?
Only owner, um,
Owner?
no. Only if the owner is like staying in the property and I think giving for rent or like giving to the employees for rent, it's IS 16.
Okay, a basic sense. When will you say the following item is property, plant, and equipment? You will say it should be tangible. Yes or no? You can touch it, you can see it. Then, second one, it should be used in your business. Yes or no? It should be used in your business. The third point is that it should be used for more than 12 months. This is the basic definition of your this one. Chalo no. IS 16, we have already covered what is the definition of asset, present economic resource controlled by an entity as a result of past event. Then, what are the two types of asset? We have discussed non-current asset and current asset. Non-current asset means what? Future economic benefits is less than 12 months, and economic benefit for current asset, future economic benefit is no, for non-current asset more than 12 months, current asset less than 12 months. Then we have discussed the difference of the tangible, intangible. Tangible means you can touch and feel, when compared to intangible, you can't touch or see it. Under intangible asset, under tangible asset, we have two important standard. The first one is what? IAS 16, and the second one is what? IAS 40. For intangible asset, which is the standard? IAS 38. Is this basic clear? Then starting with the first part, what is the meaning or definition of PP? What does property, plant, and equipment means? Property, plant, and equipment means what? Tangible asset, you can touch or see, and expected to be used for more than one period. That means it should be used for more than 12 months. Then you will say it is a PP, non-current asset. Because PP comes under the head of non-current asset, it does not come under the head of current asset. So we have an additional requirement that it should be used for more than one period, and it should be used for held for what purpose? Held for use in production or supply of goods or services. Either it should be used in the production, or either it should be used in supply of your service, or rental to others other than land and building. What they're saying, any other PPE you can give on rent other than land and building. It should be other than land and building. If I have a water bottle, if I've given this on rent, it will be my PP. You should see whether you can use this for more than 12 months or not. Or administrative purpose. Administrative purpose means what? For your business use, like your factory, your warehouse, etc. Is the meaning of PP clear? Chalo, now turn on your camera. Say, can't see, I can't understand
Yes,
whether
so
this is clear or not. Chalo, everyone, fast. If you're on, I'll continue the class. This is the first batch where I've seen no one turning on the camera. My all online batches, everyone used to turn on the cameras, and I used to not keep on ask clear. That is the issue I am facing now. So I get distracted with that also. Fast, everyone, fast, chalo. 2 or 3 days done. Others fast, fatafat. Arey yaar, you know each and everyone, yes or no? You are not new. Yes or no? You are familiar with each and everyone. Then what is the issue of not owning the camera? I do not understand that. It becomes easy for me. That is the वो भी रखा है तो आधा ऊपर छत दिख रहा है सोम का तो क्या रे
सर कंफर्टेबल ऐसे ही है।
अरे यार, भी कौन देखेगा रे? कोई भी चेहरा नहीं देखेगा। ओके ओके, इफ यू आर ट्रैवलिंग, नो इश्यूज। इफ यू कैन प्लीज टर्न ऑन द कैमरा सो दैट आई कैन नो and it will not distract me. Okay, I'm really sorry for this, but I need that you should concentrate in the class. That is the reason I keep on saying this. Okay, what does PP means? PP means tangible asset held for your business purpose. What business? Either you use in your production or supply of your service. If I say today I'm a transport company, I have my buses, can I say that belongs, that is a PP for me, because I'm using this to provide services or rental to others other than land and building. Each and every item which is in your business you're providing on rent will be coming under this other than land and building or administrative purpose, like I've purchased a warehouse, I've purchased a factory, or I've purchased a office for my staff to work this, and expected to be used for more than one period. Now coming to the next, land and building, the further classification in land and building, when it will be under IAS 16 and when it will come under IAS 40. IAS 16, when can I say? IAS 16, when the land and building is used in the production, like a factory, etc., or administrative purpose. Like means I have my office, all my sales team, my marketing team, everyone are sitting there and working. When coming to land and building, if it is provided on rent, rental to others, or for capital appreciation, or both, or use is not determined. Use is not determined. Now, when will you say the following land and building comes under IS 14? When it is not your core business. It is not your core business and it is given on rent, or you purchased a land saying that today I purchased the land. After 2 years, I know that in this area, the value of the land will go up. After 2 years, the value of the land will go up. That means you have kept this land for capital appreciation. Then it will be covered under IS 40. Or if I purchased a land and I have not yet determined the use, what will I be doing? Then it will also be coming under IS 40. Is this difference clear? Now, an example. If I say I have a company and my company is doing what? My company purchases the property and gives this on rent, and it is the main business. Will this come under IS 40 or IS 16? 1640.
16.
16. Is this clear to everyone? Yes. If I say it's my company, I purchase the land and building and I sell. I purchase land and building, I sell. I purchase land and building, I sell. This will come under IS 1642. Is this PP? Is this investment property or inventory to me?
Inventory. Repeat the question again.
The question is that if I have my business, you have to see what is the substance here. You have to see what is your actual business. If I say my business is only of taking property and giving on rent, that in that sense, can I say it will come under IS 16?
Yes, sir.
Yes or no? Because I'm using this for service providing. It's my tangible held for what? Used in production or supply of my goods or services. And can I say it is expected to be used for more than one period? Yes or no? So अभी clear है बेटे?
पर मतलब if it is
धंधा
used,
ही है, तेरा धंधा ही है कि मैं बिल्डिंग लेके रेंट पर दूं. It's your business. It's your main business.
so sir, a broad classification will be कि if something is used for production purpose, it is IS 16, and something is used for rental or capital appreciation, that is IS 40.
In rental also you have to decide bit. In rental also, if I say rental you are given and it is your main business, it's your business to give on them, then PP. If it's not your business, then investment property.
Okay, sir.
Okay,
So if it's business, is it IAS too?
business will be coming to that. Business of what? Buying and selling. If you purchase the land and building and you sell, if you purchase the land and building and you sell, then it is your inventory held for normal trading purpose. चलो, let me first complete and do a lot of example, सब clear हो जाएगा. Without that, example, today company A is into manufacturing business. They have a factory building, they have a property that is given on rent. Now this is a tangible item expected to be used for more than 1 year. Now this factory building, can I say this is used for my business purpose? So it will be your PP. Can I say the main business is what? Manufacturing t-shirts and selling, or manufacturing phones or selling? Can I say I had one property with me in any area which I've given this on rent? Can I say this will come under what? Investment property, because it's not my main business. Case 1. Company A is there. Company A have this property, company A have property, company A have property. This property, this property is used for its office purpose. And the company is into real estate business. Real estate business. These are the buildings which the company have. These buildings the company has given on lease, has given on rent, etc. XYZ. Now you say me, this office purpose building, can I say this is for administrative purpose and this will also be IS 16?
Yes, sir.
Now,
Yes, sir.
the other buildings which are there, can I say it is tangible, expected to be used for more than 12 months? Can I say these buildings are used for providing service to the public, to the customers? What is the service I'm providing? They are paying me rent, I am giving my flat to them to use it. So can I say this will be what now for me? PP?
Yes, sir.
Clear, Abhi? So, Vivan?
Yes, sir. Yes, sir.
Now coming to the next example, in case of inventory. Now I say I am into real estate company. I have 100 buildings, and these 100 buildings I have kept for sale purpose. I keep on purchasing building. I keep on selling building. Can I say these all buildings which I keep on buying and selling will be what? My inventory weighted. Now it's clear, Vivan? With the example which I've given, 3 example. Why I'm doing this again, when we come to IS 40 and IFRS 16, linkage will be there. You have to understand that. So now see, a lot of examples I've given here now. Land and building held for use for my business, IS 16. Land and building held for sale in ordinary course of business, IS 2, inventory. Land and building held for sale. I say that the building which I have, I am keeping this for sale. IFRS 5. We'll see this. What are the further conditions? Land and building for rentals. Business is of giving land on building on rent. It's your main business. So IAS 16. If business is not of giving land on building on rent, it will come under IAS 40. Then fifth one, any asset other than land and building is given on rent. What it will be? Any other asset other than land and building, can I say it will come under what? Other than land and building, it will come under PPE only. It could be machine, it could be a table, stool, etc. Anything XYZ, which is a PP. Any doubts? And it should be, economic benefit should be more than 12 months. Now, office building is a PP, factory building is a PP, company quarters is a PP, building for a staff accommodation. If you have purchased a building and you have provided this for the staff to live, this also will come under PP only. Even though if you are charging the market rent, it will come under PP only. Any doubts? Okay.
Yes, sir. Sir, for the staff building and company
Ah.
quarters, like it's not used in normal business operation, or it
Company quarter is used in the business purpose only, bete, no? Not other than that. Most of the time used. Now you only think why is the company so full that they will purchase a building nearby their company and give that on rent to the employee. You only think from a common point of view. Can I say if the company is purchasing a PP, is purchasing a building and giving this on rent to the employees at the market rate, can I say the ultimate goal is that to provide benefit to the business only, so that they can come on time, they can work more, etc. XYZ.
Mm.
The ultimate goal you have to think. That is the reason IAS 16 has already mentioned that building for staff accommodation will come under PP, because the normal assumption is that for the benefit of the company only we are doing this.
Yes, sir. So they'll reach on time, they'll be more productive and
Yes.
okay.
So think the way how IS and IFRS think. No need to go in detail. Remember basic, do and come simple.
Yes,
What
sir.
judgment IS IFRS made? So is the definition clear of PP, everyone? The
Yes.
first part of this is done. Yes, no, everyone, fast in the chat box. If not,
Yes, sir.
Yes, okay. Be
Yes, sir.
active. See, now I can see you, so I can understand from your face. Okay, clear है. नहीं तो मेरे को कुछ भी नहीं, सामने दीवार है. I see that and I think what is it clear or not? I keep on asking that. Clear, 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 clear. The way you be interactive, the way you'll find the session more interesting. उतना ही है. I can't say more than this. Now coming to recognition. Now you only say in conceptual framework what we have learned. When will we recognize an asset? Can I say when we will recognize an asset? If it provides relevant and faithful representation. When it will provide relevant and faithful representation. Can I say when the cost you know, and when it is for sure there is future economic benefits, inflow will be there. So what are the conditions for recognition in PP? PP will be recognized as asset in financial statement, that is in your balance sheet, when probable future economic benefits are expected to flow to the entity. The company will be having an income. And what? It's and, not or. There is a difference between and or. Or means either one, and means both. Cost can be measured reliably. If you know the cost, can I say for sure you can record in the books? If you don't know the cost, can you record it? No, we can't record it. This recognition criteria will repeat in IAS 38, IAS 40 again. A lot of the time this will repeat. IAS 2 inventory, IAS 41, etc. IFRS 16. So when will you recognize the PP? When it is probable, more than 50% chance that inflow will be there, cash inflow will be there, or benefit, it will provide benefit to the entity, and cost can be measured reliably. If I say recognition principle is satisfied, record PP. If it is not satisfied, what will you do, beta? You will record this as an expense in P&L. If these conditions are not satisfied, you will record this into P&L as an expense. Clear? The recognition part? Okay. Then coming to measurement. Measurement means what? Done with definition, done with recognition. Now coming to measurement. Measurement means what? At what value you should record the asset? At what value you should record the PP? Now, when coming to the case of PP, today I purchase a property from someone. It is used for my business purpose. Now I paid 10 lakh rupees to the person. Can I say what is my cost here now to purchase this bill? 10 lakh rupees. When we did conceptual framework, in conceptual framework, what are the two measurement bases? Historic cost and current value. Under current value, at fair value, value in use, and current cost. Yes or no? Now, what does measurement principle says use? Now, do understand there are two requirements in case of measurement principle. First one is what? The day when you purchase the building and at the end of the balance sheet date. Let's take today's 1st Jan 2024 and 31st 12 2024. Can I say 1st Jan 2024 means what? Today when I purchase the asset, at what value I will record. So I can record this at 10 lakh rupees. Yes or no? And coming to the balance sheet date, you either have a choice which is given by IAS 16. We will be learning that. But initially, at what value you will record? Can you initially record at fair value? No, you can't do it. You can initially record at what? Cost. That is historic cost. Historic cost. That includes what? Initial cost and subsequent cost. Initial cost means what? Today I have done the cost. Subsequent cost means after 6 months, if I have done any expense, whether should I include or whether should I exclude, they will be discussing that also. But is this clear? Measurement means what? The day when you purchase, and at each balance sheet date or each accounting period, at the end of your accounting period, you have to see whether you have to use the historic or you have to use the current value based on the measurement basis under the conceptual framework. Now coming to the initial measurement. What does initial measurement says? Initial measurement says that an item of PP that qualifies for recognition, once it meets the recognition criteria, then only you will record. At what value you will record? Measured at its cost. Now what does this cost mean, sir? You have highlighted in red. Now cost includes these all things which I have written. Will this detail be asked in your SBR? No, this detail is required in FA and FR. But as I mentioned, we will be doing everything in detail. This, if your IAS 16 is good, do remember IAS 38 will be easy, IAS 40 will be easy, IAS 36 will be easy, and IFRS 5 will be easy. There is a linkage. and you've already covered in your college also. If you don't know anything, if you have not don't know anything regarding what you have studied in the college, leave it. We are covering everything in basics here. Remove that from your mind, sir. You are keep on repeating that you have already learned, already. I'm covering everything in detail. All the questions which I do in FR, I'll be doing here also. The basic to basic questions. Calculation of the cost of the PP now. Now, before that, let's see what is the definition of cost given by IAS 16. Cost means what? Cost includes any directly attributable cost necessary to bring the PP to the location and condition intended by the management. Intended by the management. Cost will include what all? It includes directly attributable cost. Directly means that is related, directly related to the PP which you have purchased. To bring the asset, to bring the PP where? To bring the PP to the location and the condition which the management says you. If the management says that the PP should be at the 4th floor or the 10th floor, till it reaches the 10th floor, what all are the costs you have to include. If the management says that the PP has to be installed, then the installation cost also will be included in the cost of the PP. Is this clear? Now let's understand what are the further types of cost here which I've written here now. Purchase price, that means let's take $10,000 you have paid to purchase the PP. Okay, this is for sure your cost. Now I say you purchase this PP from US and you had to pay import duty of $1,000. Now this import duty will be a cost to you. For sure it is a cost to you. This cost should be included in the PP or not, coming to the question. Now if I say you have paid $1,000 of import duty and the government is saying that we will refund you back. We will refund you back. Will this be a cost? No, you are getting in again. So this will not be a cost. So when will you say non-refundable cost and import duty should be added back? So if I say this $1,000 is not refundable, you will not get back. You will include this in the cost of the asset. Can I say why we include this? Can I say the definition mentioned that it should be brought to the location and condition? The condition is what? The management will say that the machine should be used. Once it is brought in the premises, we can start manufacturing. How can you start manufacturing? If you pay import duty, then only the PP will come to your factory. This will be finance cost if IAS 23 conditions are satisfied. Now, what does this IAS 23 means? Borrowing cost. Borrowing cost, you know, a basic idea that if you have taken a loan, you pay interest, and that interest normally goes into P&L as an expense. But if certain conditions are satisfied, instead of recording the borrowing cost, that is your finance cost in P&L, you can record where? You can record into the cost of the asset. Is the second point also clear? Then any legal fees associated with the purchase of the PP, etc. Initial delivery cost, any transportation cost, installation and assembling cost, stamp duty cost, site preparation cost. So these all costs which I mentioned here, these all costs are what? When you purchase any item, when you purchase an PP. Can I say there could be two types? Either you can purchase a PP or either you can construct a PP in your within the company or by yourself. So when you're constructing a PP by yourself, there could be some other charges. Like what? Site preparation cost. If you have a land, you want to build a factory on this. Can I say whatever you include, whatever you have incurred the cost, everything will be added together and you will get the value of the factory. So site preparation cost, you have to first prepare the site. Yes or no? Before the preparation of the site, you can't start the construction. Then professional fees like lawyer fees or architect fees. If you want to construct your factory building or etc., you pay to the architect, the design, etc., xyz. That also will be included. Then employment cost of construction workers. You had employees working on this, that also will include. Direct material, labor or overhead cost on construction, that also you will include. Direct material like the cement, the water bills, etc., xyz, everything will be included here. Then testing cost. What does this means? Testing cost, anyone can you give me an example? What does this testing cost means?
So we have installed a machine or something. At first, we check whether the output that we have desired is it coming out properly or not. So we test for the first time.
So when you test, can I say you will incur some basic expense? like purchasing some small amount of raw material, etc. That where it will go, it will also be recorded in the PP value, because the management is saying that we want the machines to be in a ready condition. If the machine is that today, we should start the production. So that is the reason we do testing before. That also will be included. Now coming to this present value of estimated cost of dismantling and removing the item and restoring the site on which it is located. This is the most important point in your IS 37 also and here also. What does this means now? What does this mean? This means that in future you have to restore the PP. You have to dismantle the PP. Because of you want to dismantle or restore, you will incur an expense in future. So if you incur an expense in future, can I say why will you incur that expense in future? You have purchased the PP today, you are using it, it is providing the benefit over the years. Can I say if it is providing the benefits over the years, can I say I should record the expense also over the years? How will you record the expense over here? By capitalizing the cost to the PP and depreciating over the years. Depreciating over the years. Is the pace okay? I'm not too fast now.
No, sir.
No.
No, sir.
Dhruv, Divan, Sayyid, Shana. Okay.
Yes, sir.
Now, how will you calculate this? Now, if I say after 10 years, I have to incur $100,000. After 10 years, I have to incur $100,000. But you have to record this value today. And you know that an important point, IS and IFRS will work on faithful representation, fair information. That is, you record what is the today's value. Can I say to calculate the today's value, what will you do? What will you do? To calculate today's value, what will you do?
Discount present.
Discount it so that you get the accurate value. So can I say if the discount rate is 8% beta and the number of year is 5 years, then what will be the value? Can anyone discount this for me? Excuse me. Do you know in the normal calculator you can do 1 divided by 1.05 is equal to 5 times. You will get the answer 1, 2, 3, 4, 5. So it is 0.783. That is $100,000 into 0.783. How much is this? 783. How much is this?
It's 5 years and then the
Oh, sorry. My bad.
It must be somewhere around 6805.
Yeah. I've taken 0.8, 0.8 now.
68,000.
68, 0.680, 68,000.
058.3.
Yes, any doubts in this? The discounting formula should be clear. This should be clear. Why this discounting is important? This discounting is the basic of your IFRS 16, IFRS 9. Each and everything there is based on discounting only. The first few classes you have to discount, record, and unwind it. Now coming to any other directly attributable cost also will be included here. Is this clear? Then insurance on transit also will be included. If you have done any insurance, it's a very costly item, that also will be included. Then what you will reduce? Trade discount you will reduce. I hope you know the difference between trade discount and settlement discount. Trade discount is given when you purchase. Settlement discount is based on the payment you have given. So now you say me, trade discount will be included. Will settlement discount be included here? Settlement discount will not be included because it is not directly attributable to the cost here. It is attributable on what? On the feature or on the characteristics of the payment you do. As soon as you do the payment, you get the benefit. Clear with this what is included in cost? We'll do questions, but just understand what. Now can you say what all is not excluded? Costs which are excluded. Can I say staff training cost? It will be excluded if you purchase any PP and the staffs are not trained, you're incurring. It's not the headache of PP. The PP, if PP is a living thing, living human being, PP will say no, it's not my headache that you purchase me. It's your headache. You train the employees. Why should I include that in me as a cost, so that will not be included. Then administrative and general overheads, that also will not be included, like your salary to the employees, etc. Everything will be ignored. Advertisement cost will also be ignored. Cost of opening a new facility, like you have inaugurated your factory building, etc. You have spent 1 lakh rupees, will you include that? No. Then day-to-day repair cost, will you include day-to-day repair cost? No, it's for maintaining, it's not enhancing the value of the asset. We'll come to that also again detail. Selling and allocated overheads, that also will not be included. Initial operating losses, if you have any operating losses, can you reduce the value of the PP? You can't do that. Cost of relocating or reorganizing part or all of the entities operation, if you're relocating or etc xyz, can you include that cost? No, it's not included. It was the first time when the management made the decision where the asset should be available. Then abnormal losses, what does this abnormal losses means? Can anyone give an example for me? What does normal loss means and what does abnormal loss means?
When inventories moves from like one place to another, we have an estimate that at least like one or two products may be damaged. So that is like a normal loss. Abnormal losses above the estimated losses. Like if one or two is the estimated thing, and then like four inventory or something gets damaged, then that will be the abnormal loss.
Okay.
Abnormal loss is basically unexpected. It happens suddenly.
Okay, we have to take a break. Sorry, you reminded me. Just see now. Let's complete this and take a break. Okay. That is the reason I say remind me. Once same happened. Once I was taking class on Saturday and Sunday for my FR students. It was 5 hours. They did not also mention me that I'm not given break. It was full 5 hours stretch class. And they were enjoying. We were doing consolidation and we were enjoying. We were playing with numbers. Okay, this question, this question. They mentioned, sir, instead of 2, we'll do 4 questions, sir. I gave chalo. You have to remind me. Simple. Okay,
Yes.
is this clear? Let's complete this and take a break. Is the concept of abnormal loss clear?
Yes, sir.
Yes. And abnormal loss you will not include. Let's take you want to construct your building. So you require 100 kgs of cement. This is the example I give every time for this exam, this abnormal loss. So it is estimated that you require a normal loss will be of 5 kgs. 5 kgs will be wasted when you mix, etc. But when you got to know that the construction of the factory building has taken 140 kgs of cement, that means the workers were not able to properly utilize or they were wasting it, etc. etc. Can I say this remaining 35 is what? Abnormal loss. The cost of this 35 kgs of cement will not be included here. Any doubts in this? Abnormal loss, same repeat in IS2 and IS38. Then purchase of maintenance contract. To maintain the contract, you have purchased a PP. Will that be included in the cost of the PP? No, it will not be included. Are the items clear that will be going into cost of the PP and excluded? Let's take a break, come back and do 2 or 3 questions regarding this concept and move forward. So now the time is what? 9, 10:15, 10. Be back by 10:35. Sana, you could mention me better. You have written in the chat box. Chat box, I did not see. Okay, now take the break. Chalo. Chalo, come back. Chalo, 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 come back. One, two, three. 8 are there. 2 means who's not there? Yajjas and Shantari. Okay. Come back, come back. What about others? Done with your breakfast, everyone? Or
Yes,
not?
sir.
Or done when the class was going on? Camera was off, sir. And we know these topics all. No?
No, sir.
No, sir.
No, you can have, if you want to have during the class, you can have turn on the camera and you can have no issues in that. But try to concentrate. This is enough. This is required. Sayyid, Dhruv, Soham, Shamya, Shana, I think you're back.
Yes, sir.
Yes, sir.
Okay. Everyone done with breakfast or no?
Done, sir.
Done. What was special, Samya, today?
Dosa.
And dosa, that day also you mentioned idli or dosa something.
When, sir?
Sayyid, what about you? The last to last class. You mentioned or someone else?
Not me, sir.
Sanjana,
Okay.
sir.
Yeah, I did.
Okay. Sayyid, what breakfast? Sahana, what about you?
Sir, Paddu, sir.
Paddu, okay. Dhruv, what about you? He's traveling. Means outside only. Or you would have done the breakfast. किसने मैसेज किया चलो देखते हैं नो ब्रेकफास्ट वाई सैयद डाइटिंग क्या रे
Sir, guacamole.
यस ध्रुव इज सेइंग व्हाट ध्रुव
Guacamole.
ओके सैयद ओके सोहम व्हाट अबाउट यू
सर बनाना पड़ेगा।
क्यों अकेला है क्या रे
हाँ सर।
अरे बाप रे बाप जोमेटो है ना स्विगी है जोमेटो है कब मंगाएंगे 12 तक बच जाएंगे क्लास में
सर मंगाऊंगा नहीं, बनाऊंगा सर आज।
ऐसा क्या मेरे को लगा कि सोहम आज बाहर से मंगाएगा ओके चलो डन विद टाइम पास नाउ कैन वी स्टार्ट
Yes, sir.
एनी डाउट्स इन द कॉस्ट
No, sir.
Okay. Till here we are done, no? Now, before that, let me explain an important concept which is required here. So let me draw here. Now, you had to discount, yes or no? The example which I had given of $100,000, we discounted and recorded it. After discounting, what will you do? After discounting, what we will do?
Unwind it.
Unwind it. Yes or no? When you unwind it, what will you get extra item? What is an extra item you will be getting?
Finance cost or interest.
Okay, finance cost or some interest you're saying. Okay. Now this finance cost, where it will go? Investing, financing or operating? Where it will go? Unwinding of provision.
Finance.
Financing. Any doubts in that?
No, sir.
Oh no. Chalo abhi. Understand this table very well so that your IFRS 9 and lease will be easy. This is known as what? Amortization table. So what do you write normally if you have learned this?
The years.
Your cash flow.
Okay, so can I say directly opening balance? You can write down here also. Chalo, koi nahi. Opening balance, then you have interest, then you have what? Payment done, then you have what? Closing balance. So the example which I had given was $1,000 what discounted $10,000. The number of years were, let's now take it as 4 years and discount rate it as 5. Do this calculation and say me what is the discounted value. Discount rate is 5.
82,270.24.
82,270. Can I take this value? So can I say my opening balance will be what here? 82,270. I am not teaching you any journal entry. First, I am teaching you basic, then we'll go to the journal entry, etc. So after this interest, if you are discounting it, can I say when you unwind it, you should unwind it at the same interest rate, that is at 5%. So how much is this 5%? 82,270 into 5%. 4113. Is there any payment you're doing today? No, you're doing the payment at the end of 4th year. So can I say what will be my balance? 82,270 plus 4113. It's 86,383. Then same 86,383. 4319. 86,383 plus 4319. 9,90702. Can anyone say me what is the next year value?
Closing balance of previous year, so 90702.
4535. How much is this? 90702 54535. 95237. Can I say 95237? How much will this be now? Can I say my closing balance will be 0 and I'm paying today here 1 lakh rupees? $100,000. So whatever is the difference, can I say ultimate I'll round off at the end of the 4th year. I'll round off at the end of the 4th year. So the $100,000 minus 95237. How much is this? 4763. Is this clear? This is known as what? Amortization table. If there is any payment, what will you do? Can I say this is A,
Subtract.
this is B, this is C, and this is D? To get the closing balance, what we do? A plus B minus C, you will get your D answer. D. Here there is no payment, even though at end we have the payment, we have done this. Any doubt in the discounting? No doubts, I
No,
hope.
sir.
Now coming to the concept of what does capital expenditure means and what does revenue expenditure means. Anyone, any idea what does capital expenditure means and what does revenue expenditure means? Hmm. Yes, Semi.
So the expenditure made to bring sales or revenue is revenue expenditure.
Then what does capital expenditure means?
Just investment and stuff which are like used to run the business.
Okay. If I say I've purchased a building and on that I've done capital expenditure, on that I've done revenue expenditure, that means what? You have properly mentioned revenue capital expenditure means what, revenue expenditure means what. But now I'm asking a further question. If you have purchased an asset, what will be the capital expenditure and what will be the revenue expenditure on this?
Capital expenditure to enhance the asset.
Yes.
Revenue expenditure just to maintain it.
I hope this point is clear. Capital expenditure on an asset means you are enhancing the value of the asset. You will be getting more inflow or you're increasing the life of the asset. But when coming to revenue expenditure means you are incurring the expenditure to maintain the asset. If you incur this expense, there will be no further benefits to you, but you're only maintaining. Can I say in the example of a building, if you're painting the building, can I say you're maintaining it? You're not enhancing. If I say you're constructing an additional floor, you're doing a capital expenditure. I hope these two terms are also clear. Now, chalo with the first question. Now, what is the question here? FCO has built a new factory incurring the following cost. What will be the total amount capitalized in respect of the factory? So, factory means PP. So, we have to calculate what? What will be the cost that will be capitalized? Are they asking initial or subsequent measurement? Initial measurement. So, you know what are the costs that will be included, what are the costs that will be ignored. Please calculate and say me the answer. Fast, everyone. Still, the latest books are not available. Is it uploaded on your portal, ISDC portal, which you have? The latest books?
No,
25.
sir, it's not there. I searched it.
It's not that. That is the issue. Okay, no issues, but we will be following our notes, so no issues in that. Only IFRS 18 was new. But other things for the coming 5 or 6 chapters we'll be doing on one note only. Simple calculate. Don't type out and waste your time. I thought that evening my FR classes will be there. Some topics you can join there only. But I thought that chalo nahi, we'll do from fresh only. Some concept. So that is the reason Saturday, Sunday I have kept 2 hours for the IS 20, IS 20, these small topics. So that again we can do in the 2 hours detailing.
Yes, sir.
When coming to IS 16, no one will do this detail in SBR. कोई नहीं करवाता है. But what is important, I'll do. Done? So yeah, Dhruv, Vivan. See, as a faculty, I already know you all. If new students are there, no, it becomes very difficult for a faculty if the camera is on and they never interact. The faculty will never get to know whether he is able to understand or etc. XYZ. That happens in online class. That is the reason then the pass rate etc. When coming to professional exam, no one will say you to study etc. You have to study, you have to do hard work, you have to give your exam. In college, so you have that fear, okay, we have to pass, नहीं तो backlog लग जाएगा. इधर कोई नहीं है. If you fail, rewrite it. Simple. You're not able to clear. Professional exam tutor work is to guide you. Give homework. Do. If you do the homework, send us. We will evaluate. Simple. Done or not? Now, these are the items which are the cost. Will you include the value of the land in the factory?
Yes, sir.
Yes, sir.
Yes,
Yes.
sir.
Will you include the value of the material which you're using for the construction?
Yes.
Labor? Yes. This fees? Yes.
Yeah.
Then survey fees? Option B. Someone has mentioned option B. Will you include this survey fees?
Yes, sir.
Yes. Then site overheads. Yes, for the construction. Apportion administrative overheads.
No,
No,
sir.
sir.
You will not include this. Yes or no?
Yes.
Then testing of
Alarms.
Will you include this?
Yes, sir.
Yes,
Because
sir.
you need to what do you call, to bring in the asset. You have to.
Yes. Then next one.
Business ratings, no, sir.
Business rates, no. Why, Dhruv? Can you give the explanation?
Uh, well, there are.
Yes,
It's
yes,
not
yes.
really in the initial cost. I mean, why would you include that? Because it's, I don't know.
You don't know. You mentioned no, no.
Yeah, but like
You
I
only.
don't know see. I know it's not included, but I can't really explain the logic behind it.
Baba,
So, is it like it's not the cost which is used to bring the asset to the present condition, is it?
yes, yes, Anna.
It's not directly attributable.
Yeah, it's not directly attributable. Simple logic चाहिए. You need the logic for SBR. That is the, it will not be because it is relating to business. If some business taxes are there, etc., is there a problem in any business rate for the first year? It's for the business purpose. It's not for the purchase of the factory. Do it's not directly attributable to the factory. It's relating to the business which you are doing. So now, then, say me, what will be your answer?
Sir, is it that it is already brought into the condition after that only the rates are incurred?
Whatever way you think, ma. But it's not directly attributable. Your logic is also right, beta.
It is 6950.
6950. Everyone getting the same answer? B is your answer. Dhruv, your answer was right. So these are the two things you'll not include. Chalo na. Next question. What is the question? What is required here? Calculate the initial cost of the factory. A lot of items are given. Chalo, then start it. It's visible, no?
Yes, sir.
Question is too big. Chalo then. Will you include purchase of land?
Yes, sir.
Yes, sir.
Cost of dismantling?
Yes, sir.
Yes, okay. Then purchase of material to construct the factory. Yes.
Yes, sir.
Employment cost. They have mentioned some note. Let's read. The factory was constructed in 8 months ended 31st May 2007. It was brought into use on 30th June 2007. The employment cost are for the 9 months to 30th June 2007. The cost which they have mentioned here, employee cost, is for how many months?
9 months,
9 months. But the construction has taken place for how many months?
8 months.
So can I say 8 months only we have to include here?
Yes,
So
sir.
can I say 1800 into 8 divided by 9? Then production overhead directly related to construction. They have given note number 2 directly related. Let's see. Production overheads were incurred in 8 months and 30th May 2007. They included an abnormal cost of $200,000 caused by the need to rectify damage resulting from a gas leakage. Will you include abnormal cost here?
No, sir, only
No, sir.
normal.
Out of the 1200, how much is the abnormal? Can I say 200? It's already written in 1000 above. Do not confuse. So can I say 1000 only? We will record. Then allocated general administrative overheads. You will not record this. Then architect and consultant fees, will you record this?
Yes.
Yes, sir.
Cost of relocating staff who are to work at the new factory.
Yes, sir.
Cost of relocating. Is this the headache of PP? No.
No, sir.
Cost relating to the formal opening of the factory.
No,
No.
sir.
Interest on a loan to partly finance the construction of the factory. Note number 3. Something they have mentioned. Chalo, let's read. Omega received the loan of 12 million on 1st October 2008. The loan carries a rate of interest of 10% per annum. Will you include this? Have we learned IS 23?
Yes, sir.
Borrowing cost we have not learned. Here I am asking. Will be
No,
having
sir.
you have not learned here. But can I say borrowing cost? What did I mention? If certain conditions are fulfilled, you can capitalize. And if you remember a little bit basic, if you know that it should be a qualifying asset. Qualifying asset means that takes more than 1 year. Now, can I say construction is a qualifying part?
Yes, sir.
That is the reason. Can I say we have to include this?
Yes, sir.
Can I 1200 into 10 percentage into how many months? This will understand in more detail once we do IS, but do understand it is capitalized because qualifying asset. How many months they mention? October till how many months here? Received a loan. When was the construction started? For how many months we will capitalize here?
So the construction ended on 31st May 20x7. So until
So
that,
they have already mentioned in the first one that the construction was completed in 8 months. So can I say 8 months we have to capitalize? How much is this? 1000 to the 120 divided by 10, 80? Sorry, it's 12 million, no. So it will be 800. 12,000. They have taken what here? Can I say they have taken full 12 months? This is wrong. You only have to take 8 months. Then, chalo, note number 4. The factory has a useful life of 20 years, after which it will be demolished and the site returned to its original condition. This legal obligation arises on signing the contract to purchase the land. The expected cost of fulfilling this obligation are $2 million. An appropriate annual discount rate is 8%. The present value of $1 in 20 years' time is 21.5 cents. Now, can I say this is what decommissioning part? In decommissioning part we have to discount. So if you have to discount, can I say what is the amount you have to pay after 20 years? 2 million. So 200,000. Can I say they have directly given what is the value of $1 today? It's 21.5 cents. So can I directly apply this and get the value? If you discount also you'll get the same value, but they have mentioned use that. It's 43,000.
yes, sir.
Huh? Yes. Can I say we have to convert? This is in cent. We have to convert it into dollars. So divided by 100. So how much it will be? 430. So can I say 430 also should be included for decommission? So then what is the total? Can I say 10,000 plus 500 plus 6,000 plus 1,800 into
1,600.
1,600, then 1,000, then 400, then 430. Please do the total and say me. 6, 7, 8, 9, 10, 10,930.
Sir, I guess you missed 800.
It is 10,000. So which 800 I missed?
Interest on loan to the party finance.
Okay, plus 800. So it will be around 20,000.
20,730.
730. Everyone getting the same answer?
Yes, sir.
Whatever you say, I'll be writing when coming to calculation. If someone says right, someone says wrong, then we will recheck. Any doubts in this now?
Sir, in exam, how do we get the question? Like, do we have to explain it?
Hello, this type question you will not get also. IAS 16 I mentioned are very rare chances of being tested. Is this part clear?
Yes, sir.
Yes. Now, what is the next topic we are discuss? 4. Any subsequent expenditure on PP should be part of the cost if it enhances the economic benefit provided by the asset. That means what? Can I say capital expenditure should be capitalized, revenue expenditure should be charged to P&L. So what could be the hint in the exam? If it is extending the useful life, it is increasing the productivity of the asset or decreasing operating cost. These are important for FR student. But I hope this is clear for you. Subsequent expenditure means what? Whenever there is subsequent expenditure, just simply see revenue or capital, classify revenue, capital expenditure, capitalize it, revenue expenditure into P&L. Then cost of decommissioning. Have we discussed this or not already?
Yes, sir.
Yes. Now coming to the journal entries, the difficult part. I hope that you know the general rules, the golden rules of accounting. What are the 3 types of account?
Real, personal, nominal.
Personal, real, nominal. In case of personal, what will you write? Debit the receiver, credit the giver, then nominal.
Debit what comes in credit.
Hey, nominal is what?
Expenses.
Debit all expenses and losses, credit all incomes and gains.
And then real, debit what comes in, credit what
Credit what goes out.
goes out. This way. Or the other way, like LIC. I keep this as LIC. Liability, income, capital. If it is increasing, credit. If it is decreasing, debit. What is the other part? Asset and expenses and drawings. Will be debit increase, credit it will be decrease. This basic. Now you say me, when you purchase an asset, what will you record? When you purchase an asset, what will you record? Debit.
Asset is coming in,
Ah,
so it is increasing, so debited.
ah,
Cash is going out, it is decreasing, so we credit it.
ah. Starting classes, I'll keep on repeating the journal entry. As we move forward, fat I'll be doing. So debit, asset, credit what? Cash. If I say you have not yet paid the amount, debit or credit? Can I say debit, asset, credit, payable? Yes or no? Now, when coming to the cost, can I say the cost, all things we have learned above? So can I say debit, asset, whatever you have included, credit what? Cash. Can I say for provision, the liability which you have created, have you paid the amount today or you will pay in future? You will pay in future, so you will record this as a liability. So the provision or the dismantling part which we calculated will be recorded in asset and credit provision. And over the years, what we will be doing? Can I say what was the provision amount for us above? What was the provision amount here?
Is it the interest payment things?
1 minute. What is the provision amount? It's 430. Yes or no? 430 into, can I say what is the percent? 8%. So how much is the interest expense for the first year? So this 34.4. If you prepare the amortization table and do, so can I say then this will be what? Can I say debit, finance cost, credit, provision? It's an interest expense and your provision is increasing, so that at the end of the 20th year, you will be spending $2 million. Any doubts on this? The journal entry. See now here, I passed the journal entry. I hope this is clear. No doubts in the journal entry which we have passed, and the logic also vision. Now coming to depreciation. What is depreciation?
Wear and tear of an asset.
Wear and tear of an asset. Why do we record depreciation? Which principle?
Matching.
Matching principle. Okay. If you want, you can do this one more question homework. Write down this as your homework. Pass, calculate, and pass the journal entries. Pass the. I've written already. It is written. The question already it is written. Do this homework. I'll share this. Now coming to exchange of assets. Is this topic again important in SBR? Is IAS 16 important? Not, but we should have the basic idea. This concept exchange of asset, it is not there in BBP, it's not there in Kaplan, it's only there in Study Hub. In FR they have given a small paragraph and one question is there. But in SBR, if a question can come, if the examiner want out of the box question, they can give this. What we say, 1% chance. 99% the examiner will never give a question from IAS 16. IAS 16 questions will come with IAS 8, a change in accounting policy, or if regarding sustainability disclosures, etc. Now coming to exchange of asset. Let me first take an example. Example. This is A, this is B. Company A, company B. This company has a car, this company also has a car. Both are used for business purpose. This car is Tata. This car is, which company should I take? Mercedes symbol A, na? This is only, no? Yeah. Now I say that company A and company B have PP. This is what? PP. This is also PP. Now company A is doing what? Company A is giving this PP to company B and company B is giving its PP to company A. So can I say what is happening here? Exchange of PP is happening. When exchange of PP is happening, can I say something is going out and something is coming in? If the item that is going out, can I say you will do what? You will de-recognize it. Can I say for company A, Tata company car is going out. So what will you do? Can I say company A will de-recognize this, will remove this from the books. If you remove this from the books, can I say debit or credit? For sure credit, the value of the asset is decreasing, credit asset. That which one? Tata companies. Now can I say which asset is coming in debit? Can I say Mercedes car is coming in? Yes or no? Now the car which is going out, that is Tata's company, can I say you will know the carrying amount in your books? For sure the carrying amount. So you will remove that. Let's take the carrying amount was 10,000. Now the car which you received, bete, the car which you received, that is your Mercedes cars. At what value you will record? At what value you will record?
Purchase price.
Did you purchase here? Did you give any amount here? You have not purchased. Company B is giving the asset. Company A is also transferring the asset. No purchase, no cash was involved. Then what will you do?
So
Fair
we'll
value.
fair value.
Fair value of what, bete?
The car, Mercedes.
Which car? Tata company's car or Benz?
Benz.
Benz. Why Benz?
That is what is coming in.
That is coming in. Yes or no? Your assumption is that, sir, we should follow this.
Sir, it's minus the value which went out.
Value that went out. Why? We are not seeing the gain or loss here. We are only seeing what is the cost of the asset. Okay. No gain, only you are exchanging the asset. No gain, no loss. No amount was involved. Now here, you mentioned, sir, the fair value of the car. Which car?
Mercedes.
Mercedes. Wrong.
Sir, is it the carrying value of Mercedes in their books?
No. It's what? The fair value of what?
Tata car.
Fair value of Tata company car. What is the logic now? The logic here is that now you only say me, if I am giving my Tata company car and you are giving me Benz car, that means what? You are not giving me a brand new Benz car which is worth of 2 crores. Yes or no? You are not a fool to give me. Can I say that means what will happen here? Can I say if I'm exchanging the asset, if both the companies are agreed, that means whatever is the value I've received is what? The asset which I've given here. What is the asset I've given here? Tata company's car I've given. What is the fair value of the Tata company? You will take that as the cost of what? Cost of Benz car. That is what? Fair value of Tata company's car. Is this clear now?
How will I know the profit or loss then? It is
Ah,
not a faithful representation, right?
this is not faithful representation. This is not faithful representation.
It is not giving a clear picture to the users what is actually happening.
You're disclosing this asset, yes or no? You're removing Tata company car, you're bringing the Benz car, and you're recording that at what value? The value of the car given. Now you only say whenever there is a give and take, can I say both the parties will see their benefit? If they are in benefit, they will take. No. If I'm giving my Tata car to that company, they have some benefit, and whatever is the fair value of that, I will receive the equivalent amount of that. Basic sense. And I mentioned this is for sure faithful representation only. Why it's not a faithful representation? It's for sure a faithful representation. Is this clear? Do understand IAS will prevail when coming to conceptual frameworks. What is mentioned, you have to do that. Is this clear? The example
Yes,
which I had
sir.
given. Now coming, what is important here? You have to see whether there is any commercial substance or non-commercial substance. Commercial substance means what? Because of this transaction, will your cash flows be affected in future? Will your profits increase or etc. XYZ? If it's a commercial substance, you have an order to be followed. If it's not a commercial substance, then the PP which we have got, that is the Benz we have got, will be recorded at what value? Recognize the PP acquired at the carrying amount of the asset given. Every time do understand first priority will be given to the value of the asset given here. Now I say that in this transaction, commercial substance was that. If commercial substance is there, that means what? Fair value of the asset given. If I say the fair value of the asset here is, the fair value of the Tata company car is now 20,000. In your books, it was 10,000 and you received is 20,000. Can I say is the journal entry tallying here? No. On the credit side, that is pending. Can I say it is what here now? Credit means what? Loss or gain?
Gain.
Gain. Is this clear? Now it is clear how gain or loss will come.
Yes, sir.
Balancing figure. This
Yes.
is without any amount paid or receipt. I hope the first understand the basic logic, then we will discuss in detail. This is commercial substance. If I say there is no commercial substance in this transaction, even though the fair value is given, will you record this at the fair value of the car given? No, you will record at the carrying amount. That is debit Benz and credit T, that is at 10,000, 10,000. Clear? In commercial substance, you will directly follow what? Carrying amount of the asset given. If it's from your point of view, think what is the asset given, that will be the fair value of the value of the asset which you have received. So now you could say me, sir, if Tata company's fair value is not available, then what we will do? If Tata company fair value is not available, then you will use what? This Benz company's fair value. Mercedes car value, the fair value. Even though Mercedes fair value is not available, then what will you do? You will use the carrying amount of the Tata companies. So see here the order which you should follow. PP acquired will be recognized at what value? Option 1, fair value of the asset given, fair value of the asset received. If this is not available, then this. If this also is not available, then what? Carrying amount of the asset given. Any doubts in this?
No, sir.
No? For cash paid and cash received, can I say there could be a situation even though one company is purchasing and one company, both the companies are exchanging? Can I say there could be one party paying and one party receiving the amount? Because sometimes it could be that the value of the car which you have given me, it's not equal to the fair value. So they'll say that, okay, additionally we pay you 2,000 extra. In that case, what should we do? In that case, if cash is paid, you will add the value. Cash, who is paying here? In case of company A is paying cash to whom? Company B. Company A is paying cash to company B. So in that case, what they will do? The fair value of the asset was 20,000 and plus 2,000. So what is the fair value now? 22,000. If it is received, if the person or if the company is receiving, it will be reverse. You will reduce this. So the value of the new asset will be 18,000. Is the cash paid and cash received part also clear?
Yes, sir.
Yes. What about others?
No, sir.
Yes, sir.
No. Who is no? Vivan,
Yes, sir.
क्या समझ में नहीं आया?
So could you repeat?
Which one? Which one, beta? Which part?
This receive and
Cash paid and cash received?
yes, sir.
I'll explain with this example only. Can I take the same example here?
Yes, sir.
Yes, same example here. What is happening? Can I say the fair value of Tata company car is 20,000? And here the Tata company is carrying amount of the asset is 10,000. Now I say company A is there, company B is there. When they are exchanging the asset, company B, company A is paying to company B. Company A is paying. That means cash paid. Can I say company A is paying some extra cash here? Now you only think why company A is paying extra cash. Can I say company A is paying extra cash because company B is saying that pay me? If
Yes.
company B is saying that pay me, can I say company A is getting more value of the asset? The value of the asset which they are receiving is more.
Yes, sir.
Yes, so that is the reason we add the cash paid here. So can I say what is the first one? Fair value of the asset given, that is 20,000. Can I say along with this they have paid the cash also? Can I say they have paid this cash for what reason? For the purchase of this Benz car only, no, for the exchange of this Benz car. So the value will be ultimately 22,000. Now it's clear.
Yes, sir.
If I would say that some cash is received, then you will reduce it. Then you will reduce it. Any doubts on this concept?
Got it, sir.
Got it?
Yes, sir. Thank you.
Okay. Should I give a question?
Yes, sir.
Yes, sir.
Chalo then. FR question only I'll give you. Write down example. This will be little bit tricky, huh? It will not be basic one. Should I give a basic
Yes.
question first? चलो एक पहले एक basic question दे देते. Company A has terms with company B to exchange the asset. To exchange the asset. Company A's asset is. I'll give the name. Huh? What should I give the name for this? Box. Company B asset is pen. The carrying amount of company A asset, that is box, is $100. The company B's carrying amount of asset is $90. The fair value of the box is 120. Pen, it is 110. Question, requirement. If the transaction has commercial substance, what will be the, I will do for company A, your homework is to do for company B. I've given the data. What will be the value of asset to be recorded if no commercial substance then at what value box, no, not a box, at what value pen will be recorded? Yes or no? Company is receiving pen here. So this one you should do for 3 cases. First one, if fair value of asset given is available. If not available, and the fair value of asset received is also not available. So now, can we start doing the question? Done writing the question?
No, sir.
Okay, write down then chalo. Tomorrow we'll complete IS 16, IS 40 will be done. After this, we'll do depreciation part. When are your colleges starting? Date is confirmed or not?
August 4th, I think.
Yes, sir, August.
Okay, they have mentioned, huh?
No, sir, but usually it's a Monday, August.
They have mentioned me July 28th.
What?
I have to receive my payment. That is the issue. तो पेमेंट दिया नहीं है तुम्हारे कॉलेज वालों ने. It's that only for each and every freelancer faculty who work on freelancers.
No idea, sir.
They have not paid 2 months payment. They mentioned that after the result. Result declared, no?
Yeah, sir.
Results are declared, sir.
When it was declared? How many days done?
I a long back actually.
I think a few weeks, I guess.
Few weeks, baap re baap.
No, sir.
Yeah,
One,
sir.
No, sir, last week only.
Yeah.
last week Tuesday we got the result.
Okay, chalo, let's see when they'll credit the payment.
We got it on 10th, I guess.
Okay, 10th, huh? Okay then. No issue. Chalo, now concentrate on this company. Done writing? If no commercial substance, then what will you do? No commercial substance is there. If no commercial substance, if
Then
commercial,
carrying amount and plus or minus anything extra paid.
is there anything regarding any cash paid or cash received? Nothing. So can I say debit? What will come in pen, and credit box will go outside? So can I say box will go outside at what value? What is the carrying amount of box? 100. So can I say this pen also will be recorded at what value? 100 only. Is the second part of the question clear? We have not done the first part. This is the second part we have done, where commercial substance is not there. Now coming to the question where commercial substance is there. Commercial substance. In commercial substance, what is the first part, beta? Can I say first part where fair value of the
Asset is given.
asset given is available? Then say me what will be debited, what will be credited. Debit credit box 100. Then debit pen. But at what value debit pen? What is the value, fair value of the asset given here? You have written the question, no? What is the fair value of the asset given? Which is the asset given? Box. What is the fair value? 120. Yes or no? Can I say pen will be recorded 120? So credit it will be what? Gain of 20. Any doubts in this?
No, sir.
No? Then chalo, next one. Fair value of the asset given is not available. Then what will happen, beta? Credit box, for sure I know that it will be going out at the carrying amount. Pen will be coming. If in the question it is mentioned, but assuming in this scenario it is not available, then what, at what value? fair value of the asset given is not available, then can I say fair value of the asset received?
Received.
So what is the value of the pen? 110. So again you have a gain of 10 here. If third case, if both the values are not available, if both the values are not available, then what will you do better here? Can I say carrying amount of asset given?
So box.
Debit, credit, pen coming in, box going out, 100, 100. Now everyone, I hope this is clear. All the cases I've given. Huh?
Yes, sir.
Yes.
Um,
Can I add a masala to this? Masala, cash received, cash paid. Simple. So cash received and cash paid. Chalo now. First case one again in this. Company A received cash paid. Chalo. We'll do first one, the cash paid. If cash is paid, then what will you do, bete? Cash paid.
Add it.
Cash paid, you will add it. So can I say first one I'll do for the second one? No commercial substance. In that case, what will be debit credit? Can I say box is going out at what value? 100. In case of pen, can I say what should I record? 100. Cash is paid here. Add what? How much is cash paid? Chalo 10. 110 and 100. Is this tallying? No. So can I say credit? Credit what here? Can I say what will happen here now? Cash is also coming in, no? Or cash is going out here? Cash paid or cash received? This is the case.
Paid.
Paid.
So debit what comes in, credit what goes out. Can I say credit cash is going out by 10?
Yes, sir.
So is your journal entry tallying or not now?
Yes, sir.
Yes.
Yes, sir.
First case. In first case, the A part fair value available. Then in that case, debit credit क्या होगा? Pen box will write down 20. No, not 20. 100. Cash is going out. Cash paid of 10. Chalo. Then pen. Pen, you have to get the fair value of the asset given. What is the fair value of the asset given? 120. Can I say 120 plus 10? So what is the value? 130. Is it tallying here?
No, sir.
Credit gain of 20. Clear with this case? Now will you be able to do it for the rest case? You can just take cash paid instead of cash received or 10 and do it if you need. Okay? Vivan, Dhruv, Syed, Sahana. कितने जने धीरे धीरे 8 of them are
Yes,
there.
sir.
Yes, sir. So this is the journal entry. See now, debit PP acquired, follow the above method. Credit PP that is going out, given at carrying amount. Then if cash paid, credited, cash received, debited, then whatever the balancing figure will be, exchange gain or loss. Okay, I hope we are done with this exchange of the asset also. So then next one, coming to the main concept, which is important, depreciation of PP. So what is depreciation? Why do we charge depreciation? The simple concept is that, let me stop the screen share. Let's first discuss. So can I say in case of depreciation, depreciation is what? Systematic allocation of wear and tear of the asset. You will record over the years because it is providing benefits each and every year because of matching principle. Now you say me, what are the different methods of depreciation?
Straight line method, written
Uh,
down value method, and that machine hours.
Machine hours. Okay. Now What does straight line means? Straight line means what? SLM means what? SLM means what? Straight line basis. That means what? Will the depreciation change every year or it will be same?
It will be constant, same.
Same. Okay. What about WDV then?
On the residual value.
Residual value. Okay. So can I say SLM means what? Depreciation over the years, straight line basis. So can I say what will you use here? Can I say we'll be using the years, the useful life? When compared to WDV, a rate will be given, you will apply that and you calculate. Now you say me, when should you use SLM method and when should you use WDV method? When should you use SLM? When should you use WDV? SLM should be used when the asset is providing you benefit over the years. If you think you have an asset and the asset is providing you more economic benefits in the initial years and less economic benefits during its after the initial years, in that case you will use WDV method. Is the difference also clear? When should you use WDV and when should you use SLM?
Yes, sir.
Yes.
Yes, sir.
Okay. So now, so
Could
then
you repeat that, sir?
which one better? The difference?
Yeah. When should you use SLM
Yeah,
and when should you use
SLM when will you use? If I say I've purchased a laptop today and I know this laptop will give me benefit for the coming 10 years. So divided by 10 years. But I know that if I purchase an AC, I know that the AC will provide me more benefits during the first 10 years. So I will charge the appreciation based on WDV rate. So you see the manner how the asset is used. If you think that the asset is used more during the initial years and the economic benefit is generated more during the initial years rather than the years during the end of the usage of the machine, in that case you will be using WDV. You only have to see the usage. Okay, is this providing the benefit over the years or initially?
Okay, sir.
Okay. So now coming to depreciation. Okay. Depreciation is the systematic allocation of what? Depreciable amount of an asset over its useful life. Now, what does depreciable amount means? Depreciable amount is the cost of an asset or other amount substituted for cost less its residual value. Residual value is also known as what? Scrap value. Scrap value means today if you have an asset at the end of 10th year when you dispose of the asset or if you sell this, what is the value you'll be getting? So if I say I purchased an asset for $10,000, the scrap value is 1,000. That means what? I know for sure I will be getting $1,000. So can I say the ultimate value of the asset which I'm using is 9,000? So this 9,000 should be charged to depreciation. Should be charged to depreciation. So now depreciation on the PP starts from the date the asset is available. When will the depreciation start? When the asset is available for use. Available for use means what? It is capable of operating in the manner intended by the management. Ready to use condition. If an asset is ready today and the management is not using, in that case also you will charge depreciation. If the management says that we will not be using the asset from tomorrow, after 1 month we'll be using, but the asset is ready, that means you will charge depreciation from today itself. I hope this is clear when depreciation will be charged, when it is available for use. Depreciation on PP ceases when will you stop depreciation? Depreciation will be stopped when the asset is sold or it is classified as held for sale. If you have disposed of, then further coming years there will be no depreciation, and once you classify the asset as held for sale, you will not charge depreciation. Then coming to the methods of depreciation, the first one is what? SLM. So in SLM, cost minus residual divided by useful life. In case of reducing balance, you take the opening carrying amount into the depreciation rate. In case of units of production method, what will you do? Or R basis, you will take how the asset has been used for how many hours. If I say I purchased a machinery and the machinery can be used for 1,000 hours, and this machinery is used in the first year for 300 hours, in the second year 200 hours, and the last year 400, and fourth year 100. So then what will you do? You will allocate the depreciation based on this, how the machine is used. Now, will you charge depreciation for land?
No, sir.
No, sir, land appreciation.
Land
Only
is
on building. So what should you do? Can I say you should separate? If the value of land and building is given together, you have to separate it and record the depreciation. Now you say me the methods of depreciation like the scrap value, residual value, etc. all are what? These all are accounting estimate. All are accounting estimate. So if there is any change, you have to do prospective treatment.
prospectively.
Prospective treatment means what? From today, the change is that you will be considering from this date only. You will not look back what was the change in the previous year also. Again, once we do IS 8, it will be clear. But do understand prospective treatment means giving the effect from today for the future period, not changing any value in the past. There will be no changes in the past. So then let's do a basic question for depreciation. Example, company A has an asset, its cost is $10,000. Now this depreciation will be recorded where? Where will you record this depreciation?
P&L,
P&L, where P&L?
cost of sales usually.
Cost of sales.
It
Okay,
depends on where they have mentioned it.
yeah. But normally if I say they have not mentioned anything, can I say depreciation will go to administrative expenses? General and administrative expenses. If you have used that for the production purpose, then cost of sale, etc. XYZ. So now useful life is 4 years. Scrap value is 2000. Calculate the depreciation using SLM and WDV method. The percentage, the WDV rate, 40 percentage. Now say me, how will you charge the depreciation in case of SLM? First one, we will do SLM. What will
10,000 minus 2,000 divided by 4.
so 10,000 minus 2,000 divided by 4. So how much is this?
2,000.
2,000 is your depreciation. 2,000 is your depreciation for each and every year. So can I say for 4 years depreciation will be 2,000, 2,000, 2,000. So today the
8,000.
asset value is 10,000, and what is the depreciation? Can I say 2,000? So the value of the asset at the end of first year is 8,000. Then second year, what will you do again? Can I say again you will take the asset, you will record 10,000 minus 2,000 and the second year depreciation 2,000. You get the value as 6,000. This will carry on. So this is the way you calculate in case of SLM. Now in case of WDV, what will you do?
10,000 into 40%, that is 4,000.
Okay, 10,000 into 40 percentage, that is 4,000. So first year depreciation. So what is the carrying amount of the asset? Asset minus
6,000.
depreciation, that is 6,000. So this is first year. First year. Second year,
6,000 into 40%, that is 2,400.
2,400. So what is the carrying amount? 6,000 minus 2,000,
2,000, 3,600.
3,600. Then third year,
3,600 into 40%, that is 1,440.
1,440. So how much is this?
2,160.
Okay, chalo. 2,160. Then fourth year,
2160 into 40%, that is 864.
864. Everyone understood this? Is
Yes.
this clear?
Yes, sir.
Yes, baap re baap. See your confidence level. Arre baap re baap. Confidence level. I have to learn from you. This is wrong. Last year accounting treatment is wrong. They have mentioned the scrap value as what? 2000.
We have to add.
So what can you do? What is the depreciable amount? What is the maximum depreciation you can charge? 8,000. No. Year at the end of fourth year, your depreciation was how much? You mentioned, sir, 8,000, 864. You can only charge 160 depreciation. You can't charge 864. You will be getting the scrap value. Is this clear now?
Yes, sir.
Everyone?
Yes, sir.
If you still think that you know PP, remove that from your mind. Concentrate in the class. Any doubts in this?
No, sir.
No? So is this clear? Depreciation will be maximum of what? Depreciable amount, and you have to see. Now, if I say instead of taking your 40 percentage, if I would have taken 25 percentage, then will you keep on charging the depreciation till fourth, fifth, sixth, seventh, eighth year until you get 2000? No, you have to end till fourth year only. Whatever is the remaining balance, they mentioned that the useful life of the asset is only 4 years. So whatever is the remaining balance, you have to charge here. See here now, if I say instead of 20, 40 percentage, if it is 25 percentage, then what will you do? WDV is 25 percentage. So 10,000 into 25 percentage, 2,500. So 10,000 minus 2,500, how much is the 7,500? Next year, 7,500 into 25 percentage. Can anyone say 1,550, 1,500 into 1875? So this will be 7,500 minus 1875. How much is this?
5625.
5625. Then third year, second, first, third year. 5625 into 25 percentage, 1406. So 5625 minus 1406. 5625 minus 1406 is
4219.
4219. And in the fourth year, will you do 4219 into 25 percentage? How much is this? 4219 into 25 percentage, 1054. Can I say what is the value you'll be getting? 4219 minus 1054, you will still get 3165. And then fifth year also you will do. Yes or no? Will you do this?
No, sir.
No, you will not do this. So what will you do? Whatever is the remaining depreciation, you will add what? At the end of the fourth year. So can I say at end of fourth year, let me do here, into 25 percentage, so that you will remember this once you have this PDF with you. 7912. 31365 minus 791. 2374. This you should not do. In the fourth year, what should you do? The complete 4219 minus 2000. So this will be 2219 depreciation for the fourth year. Is it clear the depreciation? How will you calculate and what will you do?
Yes, sir.
Yes.
Yes, sir.
Then I'll give a question of depreciation. You have to do it now. Chalo, do this question for me now. All the three methods. Excuse me. What is the depreciation in case of SLM? In case of SLM, what is the depreciation?
Is it 5,000?
Yes, so 5,000.
Okay, it's how much? 17,000 minus 2,000 divided by how many years it is? 3 years. Okay, it's 5,000. Chalo. And in case of this one, 5,000, 5,000, 5,000 each year. First, second, and third. In case of WDV, how much is the cost? 17,000. 17,000 into 50 percentage. 10, 10, 10, 10, 10, 3, 3, 8,500.
8,500.
Then, so what is the value? It will be 8,500 only, no? 8,500 into 50 percentage.
4,250.
4,250. And 4,250 will also be what, bete? 4,250. 4,250 will be the carrying amount. Then 4,250 into 50 percentage. How much is this? 4,250.
But
So,
we subtract 2,000.
scrap value, right?
Yes, yes.
Third year scrap value.
Okay. Why we have to directly minus the scrap value?
Because
So
it's the end of its useful life.
Yes. Either you can do what? 4,250 into 50 percentage. That is 2,125. The remaining will get 2,125. But 2,125 minus 2,000, that is 125 further depreciation. So total it is 2,250. Is this clear?
2,500.
First year W 8,500, 4,250, 2,125. Then third method, bete, machine hours. Machine hours method. So it is given, what is the value here? Machine hours, chalo. So can I say first year it is 50, it is 100, and it is 50. So total how much it will be? 150 to 300 days. So year one, what will be the depreciation beta? So can I say it will be 15,000
7,500.
divided by 300 into 150 first year. Year one, year two. Then
So doubt, isn't the value like the cost of the asset 17,000?
why beta scrap values? Then what is the maximum?
Got it, got it, got it.
300 into 50 days. Either you can calculate per day depreciation and then multiply with the number of days. 15,000 divided by 350 per day, 50 into 150, 50 into year. So this way also you can do. Any doubts in the depreciation which we have done?
No, sir.
No, sir.
Is the depreciation concept clear now to everyone?
Yes.
Yes?
Yes.
No, now coming to a small twist here. Important. If I say that after few years, the residual value is changed, your depreciation method or your useful life has changed. Let's take the example of depreciation useful life changed. Your residual value and useful life has been changed. Then what should you do? As I mentioned, you should do the prospective treatment. Prospective treatment means from this date you should consider the changes. Now the example which we have done, again taking an example here only. If I say today the value of the asset is 1000, 10,000, useful life is 10 years. So what is the depreciation first year? 1000, second year 1000. So can I say after that your value is 8,000? Now I say after 2 years, the management has estimated that the useful life has been changed. So now the useful life is only 4 years. The remaining useful life is 4 years. That is a difference here. Remaining useful life and the total useful life is 4 years. It's a difference. Remaining means after 2 years you can further use for 4 years. If I say the total useful life of the asset has been revised to 4, that means 2 years already completed, remaining 2 years are there. Do understand the difference? So here can I say if 4 years are remaining, can I say 8,000 by 4? Further depreciation only will be 2,000. So can I say we are doing the prospective treatment? Prospective treatment means from today we are considering the change. We are not going back and adjusting it. This is a simple example. Then example 2, excuse me, if I say 10,000 is the value, scrap value is 2,000 and the useful life is 10 years. So 8,000 divided by 10, can I say my first year depreciation is 800? For each 10 years, the depreciation will be 8 years. So can I say 10,000 minus 800 first year minus 800 of second year? So what is the value? 10,000 minus 800 minus 800, 8,400. After 2 years, the company made the changes. The company made the changes. Changes to what? The company made changes to the residual value and useful life. So now I say that the residual value instead of 2000, it is only now 1000. And useful life is revised and the remaining useful life is only now 4 years. Now you say me, will you consider 10,000 or will you consider 8,400 here? For the further treatment, prospective treatment means what? Considering the change from today. So you will take 4,800 as the value, 8,400 as the value minus 1000 divided by 4. This will be a further depreciation. So instead of cost, in case of straight line method, you will use what? Carrying amount of the asset on the date of change. The carrying amount of the asset was what? 1000 minus 800 depreciation minus what? Revised residual value and revised useful life. Is this example also clear? If there is a change in accounting estimate, how will you treat it?
Yes, sir.
What about others? Samya, Vivan,
Yes, sir.
Sayyid,
Well,
Shana. So can you explain the example 2 again? Which one, Sayyid? This one only regarding the changes? Change made? Yes, okay. See now here. I mentioned that after 2 years, the company is what? The company has decided to. So let me draw the timeline so it will be clear for you. This is the timeline. First year, second year, third year, fourth year. So first year depreciation was how much better? 800. Second year it is 800. So I hope so here till year it will be clear that the carrying amount of the asset will be what? 10,000 minus 800 and minus 800. So 10,000 minus 800 minus 800 if you do, you get the carrying amount as 8,400. Now at this date the value was 10,000. The scrap value was what beta? The scrap value was 2,000. It was 2,000 and the useful life was here 10 years. Considering this, you have calculated first year depreciation, second year depreciation, but I say that 2 years are done. 2 years are done. Now the company is changing its estimate. The company is saying that the scrap value will not be 2,000 and the useful life will not be 10 years. As I mentioned, scrap value and useful life are what? These all are estimate. Estimate can be changed. You change the estimate each year as you get information. So instead of now for the remaining, for now at the end of second year, the company is saying that the depreciation or the useful life is now what? The remaining useful life is 4 years and the scrap value is not 2,000, it is only 1,000. So can I say there is a change? If there is a change, this is a change in accounting estimate. So you have to do prospective treatment. Prospective treatment means you will consider the change from after the second year. So once you do this, can I say for the next year also you have to calculate the depreciation? Then how will you calculate the depreciation? You can't say 10,000 minus my residual value is 1,000 and my remaining useful life is 4. No, this is wrong. You can't do this. You should, instead of taking the cost here, you should take what? The carrying amount of the asset. You should take what? Carrying amount of the asset. So your carrying amount of the asset is 8,400 minus what is the revised residual value? 1,000. So can I say my ultimate depreciation should be how much here now? 7,400 and the useful life remaining is 4 years. So the per year depreciation will be 1,850. So prospective treatment is done this way. Is this clear now, Sayed?
Sir.
Yes, okay, sir. What about others? I hope this is clear.
Yes, sir.
Yes, sir.
Yes, okay.
Yes, sir.
Now coming to the concept of depreciation done already. So what is the journal entry you pass, bete? What is the journal entry we do pass in depreciation? Depreciation is what?
It's
Expense.
an expense.
Expense. Okay.
Depreciation upon debit to accumulated
Why
depreciation.
accumulated depreciation? Normally in your class 11th and 12th, can I say you have learned this depreciation journal entry? Debit depreciation, credit PP. PP means you are reducing the value of the asset. You directly adjust this in PP. But here, to make your life complicated, IAS 16 says that create a other account known as what? Accumulated depreciation. What you do, it is a accumulated depreciation is what? An account. This account is created to reduce the value of the asset. This account is created to reduce the value of the asset. This accumulated depreciation is what? A contra account. Is a contra account. Contra account means, can I say PP will increase if it is debited? You can't reduce the value of the PP by creating an asset. Can I say by creating a liability, I can reduce the value of the asset? Ultimate effect will be zero. So contra account, an accumulated depreciation account is created, and this contra account nature is what? Credit nature. So that is the reason as you charge depreciation, it gets accumulated in this contra account. It's a type of a basket. In this basket, all the depreciation is accumulated. And once this accumulated depreciation balance will reduce the value of the PP. Is the concept behind the accumulated depreciation clear? It's only a presentation way different. The value will be same. You create a separate account, dump all the depreciation and then take the total and reduce the value. When you transfer the depreciation to P&L, debit P&L, credit depreciation. And this, how will you transfer? You will remove debit accumulated depreciation and credit PPE. You will remove this and the effect will be taken into PP. Any doubts?
No, sir.
No, sir.
Okay, still subsequent topic is the revaluation topic and transfer of OCI that we will do tomorrow. Before that, a small topic I will do. Before that, a small topic we'll do and we will wind up the session. Now coming to some small topics. What did I mention regarding subsequent cost? Subsequent cost, I mentioned that once you purchase the asset, further expenses could be done. The expenditure either could be capital or revenue nature. Now, what is subsequent cost? If it is repair and maintenance, it will go to P&L, expense to P&L. If it is of replacement part, now coming to the term, what does replacement part and what does major inspection and overhaul means? This replacement part we'll do tomorrow. Now I will do major inspection and overhaul. Now coming to this major inspection. What does this major inspection means? Can anyone read for me? Anyone can read this? What I have written?
A major inspection is a scheduled or mandatory
Procedure to assess the safety.
to assess the safety, functionality, or compliance of asset. These
Inspections are often
periodic and essentials for keeping the asset
operational. Examples are what? Aircraft and ships. So what does major inspection means? Now you know what recently happened in India. Yes or no? What happened recently in India?
The plane crash.
Plane crash. So can I say, is it the duty of the government also to impose some restrictions on these companies or not, to ensure the safety of the public? Yes, for sure. So what does this means? That the government will say that after every 3 years you have to review, you have to inspect. There will be an inspection cost so that we review whether the aircraft or ship is proper because of the concerns of the public. Can I say this is every period, 3 months, every 3 years, 4 years, 5 years, based on the regulation? So this, when you purchase any asset, when you purchase any aircraft, this will initially be included. So this, what should you do? This you should treat it separately. If I say you have a, the value of the aeroplane is 10 lakh rupees. Now I say in this there is an engine. First understand this concept, then we'll go to, I say there is an engine. This engine value is 3 lakhs and this engine useful life is only 3 years, whereas the aircraft useful life is 20 years. Now you say me, which one will provide more faithful representation? Can I say we have to separate the 7 lakh and depreciate that at 20 years, and we have to depreciate the 3 lakhs at 3 years? The 3 lakh, the engine should be depreciated over 3 years and the remaining 7 lakhs should be depreciated over 20 years. This means you're separating the component and doing the treatment.
Yes, sir.
Yes. This is a concept known as replacement part, etc. will be learning. Is this clear? You have to separate in recording. Now coming to this, the inspection which I mentioned, this inspection will be included. It will be for each and every year. So this inspection, what will you do, bete? This inspection cost, let's say if the inspection cost is 10,000 and this inspection is done every 3 years, this 10,000 you will depreciate over 3 years. You will depreciate over 3 years. Note, the initial cost of PP, the cost of inspection is already included. Therefore, depreciate that cost separately, applying component accounting. So this example which I have given is, the example is regarding which concept? Component accounting. Component accounting means there are separate parts in a major asset. Separate it and record the depreciation separately because the useful life is totally different. Same way, what should you do in major inspection also? In major inspection also, this 10,000 is included in the PP, saying that this major inspection is a cost for the 3 years. And after 3 years, again, there will be an inspection and it will cost you 10,000. So this 3,000, this 10,000, you should depreciate over 3 years. You should treat this as per component accounting. When further inspection is carried out, the cost of new inspection is recognized in the carrying amount of the PP, and remaining carrying amount, if any, of previous inspection is de-recognized. Normally, it will not be any balance will not be there. You know, every 3 years I have to inspect, a cost is there which I have to incur. So that you will depreciate over 3 years. If anything is there in the balance, you will remove that and you will include the new one. See here, let me take an example here. Same example, the inspection cost, let's take the aircraft, is that the aircraft cost is 5 lakh rupees. This includes 1 lakh of the engine and 50,000 for inspection. 50,000 for inspection every 5 years. Every 5 years. And the useful life of the aircraft is 10 years. So that means what here? Can I say here what all is included in this 5 lakhs? Can I say a lot of things is included? This 5 lakhs includes 1 lakh of the engine, which useful life is what? 50,000. No, not useful life. What did I mention? 5 years. The useful life is also 5 years. The inspection of 50,000 is also for 5 years, and the remaining 3,50,000 is for the aircraft. So what is the useful life? 10 years. So can I say this 1 lakh should be depreciated for 5 years? That is 20,000 depreciation. This 10,000 and this 35,000. Is this clear? We have to separate it and you have to record it. Any doubts on this concept?
No, sir.
No? What about others? Shamya, Sayyid, Ruan, Soham, Dhruv, Sana?
No, sir.
No?
No,
But now coming to a point, this is your inspection cost. This 50,000 is your inspection cost. Now I say 3 years are done. So 3 years are done. So how much you have charged? 30,000. Can I say remaining is what now here? 20,000. If I say the inspection should be done now after 3 years. So can I say this 20,000 is there in the books now? This 20,000 is, you mentioned that every year there will be an inspection, but now the inspection, when it came to the at the end of 3rd year, it is mentioned that now every 3 years the inspection should be done. So can I say there will be an inspection cost of further 50,000 for the coming 3 years? So what will I do? I will add this, I will remove this. You will de-recognize this and record completely as an expense. You will de-recognize this and record it complete as an expense, and you will record this into the carrying amount of the asset. How will you record? Debit asset by 50,000. Can I say credit asset? You are decreasing the value of the asset by 20,000 because this is included in the value of the asset. You will remove this. And can I say credit loss? Will this be a loss or gain then?
Balance is coming to the credit side, right?
So then it will be a loss or gain then?
Gain.
Gain? Pakka. But can I say we have already incurred the inspection cost of 50,000? How can we have a gain now? The inspection cost is also included in the cost of the asset. Is this correct? No. Then what is the logic? Chalo then, say me. Say me the logic. We'll wind up the class. Simple. You have to de-recognize it. Chalo. I'll wait for you to answer. Till now, I only was speaking. Now, let's see. What will you think regarding this concept? inspection cost?
Sir, I didn't get the last part.
So can you please explain the question again?
See here, is this clear? The value which we had 1,50,000 and 35,000. Is this clear? This
Yeah.
50,000 was for inspection and this 10,000, 1 lakh was for the engine. So every year the engine is used for 5 years. No issues in this. Now if I say, you mentioned that, sir, 5 years, after 5 years inspection will be done. But now I say 3 years are completed and the government has passed a new bill saying that the inspection should be done after every 3 years. Now starting from today, 3 years, the inspection should be done. Whatever you have done previously, remove it. You have to not consider the 5-year part. So can I say till the 3rd year, you are recording what inspection year? 1,000. So you have recorded 30,000 as your inspection. Yes or no?
Yes, sir.
This 50,000 you incurred on the first day only. You have incurred on the first day, beta. You have incurred on the first day. So that is the reason you have included in the cost of the asset. So you mentioned that, sir, this inspection should be done after 5 years. So this 50,000 I will depreciate over 5 years. But after 3 years, the government has brought the policy saying that the inspection should be done for 3 years. And so you have to pay further amount today only. Then what will happen? First, there was an assumption that 5 years inspection will be done. So incurred a cost of 50,000. But now I say it has been changed and now 3 years you should do inspection and it will cost you. What will you do? Is this question is clear?
Yes, sir.
Yes? See, let me share the notes also which I have. What did I mention?
It will be de-recognized. Whatever the carrying amount is, we just recognize that. And if any remaining is there, then it says it will be de-recognized.
That is for sure that remaining anything is that you will de-recognize it. If you de-recognize, how will you de-recognize it? Yeah, you mentioned de-recognize. So what is the remaining here in the question which I have given? 20,000 was remaining?
Yes, sir.
So when you de-recognize, will you debit or credit the asset?
Credit.
Credit the asset, yes or no?
Yes.
Then what will you do?
So already
Liability?
recognized more expense.
Yes, more expense. How? Chalo. Basic of journal entry. Chalo now. Let me do it separately, then you'll understand. Now you only say, bete, the new inspection cost is there. What is the entry will pass? Debit what, credit what? Inspection cost, cash is going out.
Yes, sir.
Asset is 50,000, 50,000. Yes or no?
Yes.
Yes.
Now, previous one, old one, what you'll do? Credit asset
De-recognize.
and P&L. अभी क्लियर है अर्थ आयता इವಾಗ
Yes, sir.
This only I was thinking that someone will say basic sir you have not recorded cash because we are paying this no bete 50,000 we are paying this and credit again P&L debit of 20,000 because this is an expense you have already paid it but you have recorded that expense for 3 years only but that expense should have been recorded for how many years 3 years. You planned for 5 years, but you have recorded for 3 years. Then whatever is the remaining, recorded totally today only. So that will be considered as an expense. Now it is clear?
Yes, sir.
Yes, sir.
Yes. What about others? Journal entry. Why I am focusing a lot on journal entry? it's that the question one which will come for you will have 13 to 14 marks of adjustments, and you should be perfect with journal entries. If you be perfect with journal entries, if you have good knowledge of journal entry, the adjustments will be easy for you, because you're paying today a new cost to the government. The government is saying that, yeah, we mentioned 5 years of inspection. No, now we are saying that you have to do a fresh inspection. A fresh inspection will be that pay 50,000. So I paid. So I capitalized that to the cost of the asset, debit, asset, credit, cash. And whatever is the remaining, I will de-recognize. So if I de-recognize, I reduce the value of the asset, and the remaining debit will go to P&L.
Yes, sir.
Yes. So this we have. Tomorrow we'll discuss this again, and then we will do the revaluation part. And with that, we will complete this part. IS 16 will be done tomorrow. Tomorrow we'll do questions regarding this. I'll give you FR questions only.
Okay, sir.
Okay.
Yes, sir.
What about others?
Yes, sir.
Sayyid Dhruv?
Yes, sir.
Yes. Okay. By tomorrow, we will. What is tomorrow? It's Wednesday. So 16. So 1 minute. Give me. Let me share you the. Again, please. If you were late to the class, you know that what did I mention? I mentioned that Saturday, Sunday, 2 hours. We have to decide the timing. So we'll decide the timing tomorrow, as two are not there here. Is my Excel sheet visible?
Yes, sir.
So IS 18, IFRS 18 done, IFRS 13 done. So tomorrow IS 16 will be done, IS 40 also will be done. Then IS 20, 23 will be for Saturday, Sunday. Then remaining will be what? 36, 38 and 40. So Thursday and Friday, we will try to do 36 and 38. Intangible and 36. So for IFRS 9, we'll do on Monday. Clear with this?
Yes, sir.
Okay, chalo then. Okay, bye bye. Have a good day. Try the questions regarding fair value. There, one more question is also there regarding fair value. That is when you purchase any company, you purchase at fair value. That also I will add it. Do that also. Okay.
Yes.
Okay, sir.
Bye
Yes,
bye.
sir.
Have a good day.
Bye,
Thank
sir.
you,
Have a
sir.
good day. Thank
Bye bye.
you.
Welcome. Welcome.